permanently this year. That's almost 3 times as many as last year, when closures set a record. Retail and tech data firm Coresight Research says most of the closures are expected to occur in malls. The coronavirus pandemic has devastated an industry where mall-based retailers already were struggling. House and Senate Democrats have proposed a sweeping police reform bill. Before presenting the legislation, party leaders knelt for almost 9 minutes to honor George Floyd. His death at the hands of Minneapolis police has sparked several weeks of protest. Amongst other things, the Democratic bill would change the definition of criminal misconduct for police. Senate Majority Leader Mitch McConnell hasn't ruled out Republican support for some sort of police reform. And North Korea is shutting off communications with South Korea. Kim Jong-un's regime says South Korean authorities carried out hostile acts. That appears to be referring to leaflets critical of Kim. They were attached to balloons and floated across the border by anti-North Korean activists. British Prime Minister Boris Johnson will set out his plans today for easing the national lockdown. That's after officials reported the lowest number of daily coronavirus deaths since restrictions were imposed. Last month, Johnson said that non-essential retailers could reopen June the 15th if the threat of the virus continued to recede. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
I don't think that the Fed is yet ready to move to yield curve control, particularly that since there remains a great deal of uncertainty over the fiscal policy, and they don't want to be seen as playing in that political debate.
Adam Posen of the Peterson Institute ahead of the Federal Reserve decision. That is coming up tomorrow. Full coverage on Bloomberg TV and radio, led by Scarlett Fu and Tom Keene. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Abramowitz, this is Bloomberg Surveillance, getting you in shape for the price action of the morning and the opening bell just around the corner. 1 hour and 12 minutes away, with equity futures just off the lows of the session, down 24 and off by 0.75% on the S&P 500. Futures just above 3,200 on the S&P. In the bond market, speaking of the yield curve, not steeper, flatter, yields not higher, they are lower on the session this morning. Your 10-year yield comes in 4 basis points to 0.83%. And Tom, all quite intuitive this morning. Risk appetite taking a little bit of a punch. The Swissy stronger, the Japanese yen stronger as well.
No question about that. I like, John, how you picked out the Adam Posen side on yield curve control. Of course, that's in the fixed income market. How far out the yield curve can the Fed actually affect the market? We'll speak with Olivier Blanchard about that here in a bit. But right now, on price earnings ratio control, Gina Martin Adams with Bloomberg Intelligence, of course, running all of our equity strategy as well. I mean, I guess, Gina, if the Fed could, they'd like to put a control on the equity market. How out of control are stocks?
Yeah, it's a great question. I think that stocks actually are trading at levels that are reasonable considering what the Fed has done. And by that, I mean when we run our model, which includes components such as the yield curve, such as corporate credit spreads, anticipated earnings growth over the next 24 months, we find that a reasonable multiple for the equity market is just under 22 times trailing earnings. So what the market has done is re-rated given the extraordinary policy accommodation that we've seen. Now, going forward, we've already seen that re-rating. So what drives stocks going forward? Well, it's unlikely the Fed is going to do a lot more. Obviously, this yield curve control is the big topic of this week, but how much does that really push down rates? Will we see the yield curve become more upward sloping in that environment is a huge question, especially for the financial sector. But the market is re-rated based upon what the Fed has done, based upon this extraordinarily accommodative policy environment. And now we're looking at the next steps for stocks probably have to be earnings related. We need to start to see some signs of recovery. We may have started to see that last week with the employment report, but we're looking for a little bit of follow through in coming weeks to really confirm that, hey, the recovery is starting, it's likely to sustain, and that could keep the bull running.
So, Gina, you be the forward-looking strategist, and I'll be a strategist over at Hindsight Capital, explaining things neatly about what we've already seen. Obviously, the market can bottom long before the economy does. We can see that in the way things have played out already, and quite clearly, before the economy picks up, you start to see the PE ratio accelerate away in a way that looks like this market is incredibly overvalued. And you've hit the nail on the head. It is now about earnings expectations. Can you help us all understand, help our audience understand where earnings expectations are right now and where you think they're going relative to the positive surprises we're seeing in the early reopening?
Yeah, it's been really interesting because I think that analyst expectations are now actually too low. If you look at your average earnings recovery coming out of recession in the post-World War II experience, your average recovery is about 10% growth in EPS in the first 12 months out of recession. Right now, analysts are forecasting 1.5% growth starting in the third quarter of this year. In our back-of-the-envelope calculations, which suggest the market is now pricing about 2% growth. I think you can get at least half the pace of the average recovery of 5%. That only requires a tiny improvement in revenue growth because you get a ton of operating leverage given the amount of cost cuts that companies have gone through to actually produce mid-single-digit EPS growth. If the employment report is a precursor to the rate of improvement that we're going to see in the economy, all of us will be too low. And all of us are going to be too low because just the devastating declines in the first half of this year make next year almost assured to be double-digit growth. It's really a question of what happens in the second half of this year, and can we start to climb out? Analysts are forecasting double-digit declines in earnings on a year-over-year basis for the whole second half of this year. So if we start to see a faster than expected recovery emerge and that recovery endures, which is another critical question, then we probably will see analyst estimates start to be revised up. And indeed, over the last week, we did start to see analyst expectations for the second half of this year start to tick up. It's a tiny, tiny tick, but it could be the beginnings of something of a more positive trend emerging for estimate revisions, which would be the first time since December of last year, frankly.
Gina, this is really important, and I want to sit here for a second. In other words, are you saying that equity valuations where they are not adequately pricing in the extent of the recovery to the upside, and that there is a significant leg higher in stocks just based on the fundamentals of earnings that were expected, or the surprise that you are perhaps seeing?
I'm saying there could be. What I'm saying is if we do see a persistence of recovery in the economic data, then yes, stocks are only anticipating right now about a 2% recovery in earnings growth over the course of the next 12 months following the end of the second quarter. We could very easily see 5 to 10% just upon an improvement in economic growth, especially given the second half of this year where expectations are for persistent declines and very, very negative declines relative to the pace of growth that we experienced a year ago. Now, the other thing to consider is the fact that we would argue you have not had valuation expansion on an anticipation of better earnings at all. As a matter of fact, the vast majority of the valuation expansion that we've experienced so far is because of lower rates and tightening credit spreads since the March low. There is a component to our valuation model that suggests, if you see an improvement in the 24-month earnings outlook, if we get an improvement in the second half and that's expected to endure throughout 2021 and even into 2022, really sparking a more durable economic recovery, then you very well could see valuations even expand more than our model would suggest. I think that's a little bit of a long shot at this point in time for us to anticipate, really getting a lot of visibility into late 2021, 2022, but it's not beyond the realm of possibility.
Gina Martin-Adams of Bloomberg Intelligence, our chief equity strategist on this equity market, outlining one of the more constructive views about earnings estimates in the months to come and what we could see. Gina, thank you very much. Tom, I don't think it should be lost on anyone. It is 8:25 Eastern time. This show began at 7 Eastern. In the last 1 hour and 25 minutes, hardly anyone has mentioned coronavirus or COVID-19. And the question of the moment for me is how market participants will respond to an increase in the infection rate. We're seeing that in several states across the United States of America at the moment. I'm just wondering whether this market has moved on, whether it responds negatively to that if we see it more in the coming weeks or not. But hardly anyone is discussing it anymore. It's just like this market has moved on.
I really take your point, John, but I do want to mention it's not several states. I thought the Washington Post summarizes beautifully this morning. John, it is 14 states in Puerto Rico. It's really quite extraordinary. And as we talked way earlier this morning, it's about the hospital beds in those states. There's a fewer beds there, to say the least.
Ken Vexler of Acumen Management has written wonderfully on that in the last couple of weeks. From New York this morning, good morning. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience.
Consistency is more important than volatility.
There's very likely to be a decoupling between the United States and China.
Look, I think the reality is this is highly unusual.
This is a really good example of the intersection of business and government.
Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From New York, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Lisa Abramowitz. From New York this morning, good morning to you all. 1 hour away from the opening bell in New York City, with equity futures bouncing off the lows, still down 23 points on a session. We are negative 0.75%, just above 3,200 on S&P 500 futures. In the bond market, Treasury yields lower, the curve flatter. We're down 4 basis points on a 10-year to 0.83%. Relatively unchanged on twos. A nice bit on a 30. We come down 6 basis points, just south of 160 on a 30-year yield in the United States of America, as we count you down to that Fed decision, with yield curve control very much the topic of the moment in foreign exchange. What do we see? A reflection of that risk aversion this morning. A stronger Swissy, a stronger Japanese yen, Tom. That's the theme of the market at the moment, just a bit of risk aversion, and you see it throughout the asset classes, from bonds to FX to equities as well.
And of course, all of this market gyration and the historical moment we're in, John, is wrapped around theory. John, it's so good for me to be at home here in New York because I'm near my vast library. I had the intern here go back deep into the archives. And John, in Olivier Blanchard, Macroeconomics, my edition is a little younger, is, John, on page 94, here is Professor Blanchard. May I quote, John?
Of course you may. Go on.
And when you feel really confident, put on a bow tie and go explain events on TV. Why do so many TV economists actually wear bow ties is a mystery. The gospel, according to Olivier Blanchard, of course, that out of his classic, and that's the quote out of his classic book on economics. He is, Olivier Blanchard, of course, an esteemed tenure at the International Monetary Fund as chief economist, studying under Stanley Fischer at his Massachusetts Institute of Technology, and now at the Peterson Institute, holding court with Adam Posen. Professor Blanchard, honored to have you with us today. You are definitive, and you have been wonderful. You have been definitive, Olivier, in saying we must have the courage to reflate. With the years that you've studied this topic, do we have the ability, led by Jerome Powell, to reflate ourselves out of this low interest rate regime?
I do not care too much about what happens to interest rates. I care about what happens to the economy. And it may well be that we need to have very low rates for a long time. That's not a catastrophe, but on your question, yes, I think we can reflate. I think we can go back, not quite to the old normal, but to something not far from it, and we can probably go there fairly quickly.
You wrote, Olivier, and you spoke at the American Economic Association a year and a half ago, about our public debt. Are we nationalizing our public debt? Have we messed up our bond markets so much with this Fed action that it's irreparable?
Well, on this, we surely disagree. I think there are two issues, the level of debt, and I think we were wise in this case to spend what we needed to spend. And yes, there'll be higher debt later, but it's not catastrophic at all because the interest rates are low. And then on the central banks, they did what they had to do, which is they're not trying to make life nice for the government. They are basically trying to push the economy up. And the result of this is that they have very low rates, which is the right thing to do. And one of the channels is that it makes the life of the government a bit better than it would otherwise. So, yes, I think both fiscal and the monetary authorities at this stage in most countries are doing the right thing. I'm not terribly worried.
Tom Keene, can we just confirm that you don't actually have an intern at home, and Mrs. Keene is the one that you tell to go and get the books from the bookshelf?
No, we're very lucky. We were going to do an extern and a virtual intern kind of thing like a lot of corporations are doing, and we are able to desanitize the house so that we're able to get an intern in.
That's very thoughtful of you, Tom. That is very thoughtful. I imagine HR is going to reach out very shortly to find out what on earth is going on at Casa Keene very shortly. Olivier, it's fantastic to have you with us on the program. Tom's question on debt, I think, is an important one. We have the debt on the official sector balance sheets, and then we have the debt that has increased on private sector balance sheets. I want to pose the following question to you, thinking about the latter and not the former. A lot of companies have taken on a significant amount of debt over the last several months. Olivier, how does that shape your thoughts about how this economy recovers over the next several years?
I think that's one of the issues we have to watch out for. I think it's more of an issue for the small and medium-sized firms. And some of them should be given a break. I mean, if they accumulated debt because they had cost, even because they were closed, but they still had cost, then there should be a way of helping them out. This could be done by just forgetting some of the debt to the extent that they owe it to the state, or it could be that they may need to restructure, and then the debt has to be, decreased in value or forgotten or forgiven. I think that's one of the issues that we're going to have to deal with. There are going to be many small firms which are going to be in trouble partly because of the debt they had before, but also because of the debt they have accumulated since then. So one of the issues which I wanted to discuss with you is, and one of the things that we have pushed with two colleagues, is the notion that the normal way of restructuring debt, which is a fairly heavy way, may well be overwhelmed by the amount of potential restructurings which are going to have to be done. And so one of the things that we propose is a simpler restructuring process in which at least the part of the debt which is due to the state would be basically automatically adjusted rather than as a result of bargaining between the state, the firm, and the banks. But in short, this is a big issue, I think, mostly for the small and medium-sized firms.
Olivier, let's build on what you're saying on the proposal where there's sort of a mathematical haircut that all debt owners have to take and that companies can just accept into their balance sheets in order to reduce their debt load. What kind of disruption would that lead, given the fact that the holders of this debt are pensions, are foundations, are state and local governments? The fact that this is not a zero sum, it's not that you could just sort of cut one side of the balance sheet and everything is fine.
I think you're right. And when you decrease the value of the debt, you make the debtor better off, but you make the creditor worse off. It's very hard to know how many firms will have to be restructured. When we're talking about very large firms, then that becomes a big issue for the firms which hold the debt. I think here we're talking about a very large number of very small firms. And in many cases, these firms are viable. I mean, if you take restaurants, once the pandemic is gone and physical distancing is not an issue, restaurants should be able to do more or less what they were doing. So what we need to forgive is a relatively small amount of debt. My sense, it's very hard to do computations at this stage, but my sense is if we were to restructure the debt of the small and medium-sized firms which need restructuring, which is clearly not all of them, this is something which is very tractable. For whoever holds the debt on the other side. For the small and medium-sized firms, it's the banks, and the banks are where before the virus came, were in fairly good shape from that point of view. So they can absorb, is my sense, the loss that would come from restructuring the debt of the small firms.
Professor Blanchard, Bloomberg Surveillance has talked to Paul Deguar of LSE, Willem Bouter, of course, about the changes in Europe. We have seen Macron and Merkel really speak about a new unified fiscal effort in Europe. Do you buy it? Are we going to see finally some form of mutualization and union on the fiscal side in Europe?
Yes, we are going to see some form of mutualization and transfers. I mean, the project which is in play will happen. In what form exactly, I don't know. Whether it will come in time to help with COVID recovery, I'm skeptical. That it will have the form that the people who pushed it in the first place, is it going to have that form? No, I'm not sure. But it is still an enormous first step. It's actually two steps. I mean, what I was hoping for was mutualization, the issuance of debt by the EU in some form. And that's going to happen. But they did more than that. You know, I thought that they would do this and then they would basically just have each country gets its share of the debt, of the proceeds from the debt sale, and go from there. The plan as it is has mutualization and transfers, which is that some countries will get more than their share if they can justify it. This is very ambitious. I suspect the final product, as always, is not going to be exactly what we dreamed of. But yes, I think symbolically it's terribly important. Once a program like this is in place, once the EU budget can, the EU can issue debt on its own and use the money in various ways, very hard to go back. So again, it's going to be very bumpy, but this is genuine progress. This is change.
Olivier Blanchard at the Peterson Institute. Olivier, fantastic to catch up with you, sir. Thank you very much for your input. We look forward to getting you back on the show very soon. Tom, it's a really, really important point that Olivier is making. If we can create the mechanism to have some kind of fiscal transfer on the continent, it's a huge step forward. But Olivier himself acknowledges also the timing of all of this. If we're seriously squabbling down in Washington about the next steps on the fiscal side of things, think about what is playing out in Europe at the moment. Even if they agree on a mechanism for some kind of fiscal transfer and all countries on the continent get behind it, this capital won't be deployed until the new year. Now, if we were talking about any other geography and the next fiscal steps, and you told me they were going to wait several months before they went forward with their big effort, you would say that was too little, far too late. That's where Europe is at right now. And I understand that relative to expectations, it's a very low bar, and Europe has made some improvements. Germany has got on board. But we're still not there yet, Tom, and we still risk permanent damage on the continent.
Yeah, no question about it. And what's so important here, John, is from the pandemic of, let's call it late February, early March, May 15th and June 1st were a mystery. From here, getting out to August and September, I would argue, John, maybe an even greater mystery in that linkage of investment and finance over to economics. Where we're going to be Labor Day, John, that's a holiday after September 1st. Where we're going to be Labor Day, I don't know.
I have been here about 4 or 5 years, Tom. Just remember that. You know, I haven't been here 5 minutes. I know the national holidays. I've got familiar with them. It has been that long. We're in year 5, I think now, Tom. Time flies. And I love being with you too. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Abramowitz, this is Bloomberg Surveillance with equity futures negative. We're down 30 points and off by 1%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Some Republicans in Congress are questioning the need for more pandemic stimulus. That's because of the surprise rebound by U.S. job markets. Lawmakers will have to decide whether to renew the extra benefits they approved for unemployed Americans. The $600 a week payments expire July the 31st. The Senate Finance Committee takes up the matter today. Joe Biden has slammed President Trump's handling of the economy. He said the president inherited the longest economic expansion in history from the Obama-Biden administration, but squandered it. Biden accused President Trump of turning his back on the middle class with an agenda that helps corporations and the wealthy. Bail was set as high as $1.25 million for the former Minneapolis police officer charged with second-degree murder in the death of George Floyd. Derek Chauvin didn't post bail. He's expected to enter a plea at his next court appearance on June 29th. Taiwan Semiconductor has secured government subsidies for a proposed $12 billion chip plant in Arizona. TSMC is the main chip maker for both Apple and China's Huawei. Building a factory in the U.S. may allay national security concerns. White House officials have warned about the danger in having much of the world's electronics made outside the U.S. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
How many people are going to come away from this experience deciding, hey, we don't need a fancy office in downtown Manhattan. We can work from home. We have our computer. We have our ability to get on the internet, to have Zoom broadcasts with our colleagues. And why should we pay $100 a foot in rent to have a fancy office?
Dick Ravitch there, the former Lieutenant Governor of New York, the state of New York, on reopening this economy and how quickly people will get back to work, and whether some of these companies might change their mind about their footprint in a city like New York City. From New York City this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, counting you down to the opening bell. I'll step away, Tom Keene. I'll be catching up with Mike Powell of BlackRock a little bit later this morning to look ahead to that Fed decision and to try and understand whether what we've seen on the screens in the last 24 hours, the last week or so, is a durable rotation or something a little bit more speculative in the more riskier parts of this market.
Very good. Our great market coverage here will continue that forward into the open as well and through the day here at Bloomberg. I do want to mention Daniel Yergin on oil coming up later this morning as well. There is a reopening. There is a reopening across so much of the Bloomberg radio coverage of Washington, of Boston, of New York, the bigger cities, if you will. But far more, it is a reopening across this nation. We wanted to go narrow here. And so right now, for all of you from coast to coast, we take a real look at the New York market. Jonathan Miller joins us. He's with Miller Samuel, and he is truly encyclopedic on the national real estate market, particularly the residential market. John Miller, is there a permanence to people leaving the cities because of the pandemic? I just don't buy it. Is it true?
Well, so we're certainly seeing a surge in inquiries as people are looking, and we're also seeing an uptick in contract activity surrounding the outer reaches of New York City. However, I'm not really of the mind, at least this is some sort of permanent structural. We've seen this before in other crises where there's outbound migration for a couple of years. I think what really we want to see is what happens after, and assuming there is a vaccine, that's when, the real permanence of this takes hold. Right now, people
Lisa
are cooped up. I mean,
yeah. John Miller, Lisa mentioned to me the price declines on Billionaires Row. I mean, we've got this fascination on the ultra rich. What are prices doing beneath Billionaires Row?
So really, at this point, we've seen very little price discovery because the brokerage community in New York State, and specifically New York City, is not allowed to physically show property. So there's really been, we're in this fascinating, unique period of very little transactional data. What we are seeing on the closing side, where people are trying to close deals or get out of deals that were signed sort of pre-COVID, we're not seeing patterns yet. We're seeing half of the transactions anecdotally that I've run into, there's no discounting, and half have a pretty narrow discount range. So until early July, I believe, when the state decides to go to phase 2, which allows brokers to physically show, I think we're going to see instant price discovery. We just don't have it yet.
Jonathan, I love speaking with you, especially at a time when there is so much transformation. And you talk about how New York City has always bounced back and that typically these out-migrations are temporary. But is this time different because of the work from home dynamic, the fact that many people are looking for more space and a more comfortable setting for their families at a time when they are more capable of working not in the major city center? Do you think that that changes this entire landscape?
So I absolutely think that this time, and we always say this time it's different, and that's the component that's different. It's not so much about the virus and the density. It's really about the ability to work remotely. So as a result, we may see things change in the sense of second home properties end up becoming what I would call co-primary, where you have a primary residence, and instead of a sort of seasonal summer place, you really end up having something that's equal to your primary residence so that you can go back and forth. The urban to suburban, I'm not confident that that's a long-term pattern, but I'm more confident of the second home market, instead of being sort of pummeled by downward economic activity ends up being some sort of some sort of new market. This idea that the consumer thinks of a second home in its relation to the primary as an equal instead of something that is less. And we're already seeing that in outlying areas like the Hudson Valley, like upstate Connecticut, like the Hamptons and the North Fork. Traditional second home markets are seeing a flood of inquiries coming out of the city. It remains to be seen how long that will be.
Jonathan, I got 1 minute. John, I got 1 minute left. Very quickly here, we want to go down to the low end of the market. Riley from St. Louis is thinking of moving to New York City and wants to know if studios are going to be cheaper by the time school starts in September. What do you think?
I think the answer is a very definitive no, because the lower end, even though that's where the concentrated job loss is impacted most, low interest rates and the absolute limitation on supply keeps that market pretty tight. Maybe not as tight as it was 3 or 4 months ago, but still very tight now.
John, it was only weeks ago you and I were living in studios. Jonathan Miller was 6,000 square feet north of New York. Thank you so much. He is with Miller Samuel as well. Lisa, I'm glad we digressed there. You know, we talk about the Fed, but it really is about markets. And Lisa, I am absolutely stunned at the continued fixation on billionaire articles like the whole Wall Street Journal Mansion section and all that. Our fascination on that stuff I find crazy.
Well, look, John, I mean, Tom, there's so much there because on one hand, there is just the pure fascination and drool factor of some of these homes. But this also has been an area where you've seen an incredible amount of building. And you've also seen a lot of foreign investment at a time when those issues are being particularly hard hit. You go lower down, the question, as our individual from St. Louis says, is, can I get a discount? And the answer is, it is unclear, depending on whether you are below that billionaire row, Tom.
Well, we hope everybody finds their abode in the coming months. Certainly in New York City, better news on this pandemic. We are going to continue through the morning. Lots to speak of. John Farrow looking at the markets in the next hour on Bloomberg Television. Paul Sweeney and I will drive forward the conversation on radio. Daniel Yergin in a bit. This is Bloomberg.
Los que hayamos adoptado un abuelito, vamos a continuar viéndolos a nuestros abuelitos, ¿no? No podemos dejarlos de verlos por el hecho que se termine de solucionar la pandemia. Más bien al contrario, habremos tenido un mayor contacto con nuestros abuelitos hasta sus últimos días.
Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
the Dow and the S&P.
Shall we? So the euro on a 7-day
sizable moves in the currency market. Temperatures down 0.5.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
The U.S. and Japan duke it out over exchange
China's slumping onshore bond market is great.
From New York City for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. 30 minutes away from the opening bell after erasing all of the losses on the S&P 500 for 2020. This Tuesday morning, we take a bite out of them, just a little one. Equity futures down 30 points on the S&P 500. We are negative 1 percentage point going into the cash open. In the bond market, Treasury yields are lower, the curve is flatter. We are down by 6 basis points on a 10-year to 0.81%. And in foreign exchange, reflecting that risk aversion, the Swissy is stronger, the Japanese yen is as well. So that's your price action. Here's the big issue. We begin this program with a single question. Have we seen signs of a durable rotation over the last several weeks, or real signs of unsustainable speculation?
We're seeing a continued momentum in the equity indices.
Ongoing rally since April or thereabouts.
Equities are right to rally on the fiscal stimulus.
The market is getting a little bit ahead of itself.
They've been right to rally on the monetary stimulus.
The analysts are still way too optimistic about corporate profits for the second quarter and the third quarter of this year.
My suspicion is that the jobs market is a little bit weaker than the market currently believes.
We think in the near term, we do continue to see the cyclicals outperform. There is some room to run.
From here, we probably appreciate at a much more measured pace.
It doesn't surprise me in the slightest that we see a little bit of a pushback or even just a slight taking profit at this stage.
We're in for a much deeper profit slide than investors are expecting right now, and that does make the stock market somewhat vulnerable.
That's the debate of the moment. Let's get to the price action of the morning and bring in Bloomberg's Katie Lyons. Good morning to you, Katie.
Good morning, John. Well, of course, we're taking a bit of a breather this morning, but maybe that's no surprise considering we've run so far so quickly. That stimulus sugar high, perhaps a better than expected or quicker than expected recovery in economic data, really just fueling equities on a tear. But since the bottom in late March, global equities have added $21 trillion of value, John. Roughly half of that has come from the U.S., where stocks are up by just over $10 trillion. For the S&P 500 in particular, that index has rallied about 44% from its recent low, and as of the close yesterday, entirely erased its loss for the year. That happened in just 53 days, John. The velocity of this rally really just quite remarkable. It has been so rapid, in fact, that strategists have really just been left in the dust. Even with the pullback in futures this morning, the S&P 500 hovering around that 3,200 level, and that is about 9% above the average year-end projection of 29.33. That is the widest gap in Bloomberg data going all the way back to 1999. Now, according to strategists tracked by Bloomberg, there are still 4 that see the index rising further above these levels. But Brian Belsky over at BMO, $3,400 target is actually for the next 12 months, not the end of this year. JP Morgan, Canaccord, both have pushed their targets out until 2021. And then Oppenheimer's John Stolfitz has suspended his 3,500 forecast due to uncertainty over the coronavirus outbreak. And there is still plenty of skepticism out there, John. At the low end of the spectrum, most bearish is Manish Deshpande over at Barclays, who sees the S&P ending down 22% from current levels around 2,500. He says expectations for a V-shaped recovery are just too optimistic. You also have Tobias Levkovich over at Citigroup citing really lofty valuations with the S&P trading at a PE multiple of 21. So the question is, are strategists behind like they were in 2019 when they were about 10 percentage points behind where we ultimately ended the year? Or have we really just gotten way too far ahead of the fundamentals at this point, Sean?
Kelly Lyons, thank you very much. The debate of the moment, I said a little bit earlier on Bloomberg TV and radio, if last week was the uncomfortable calm, this morning, over the last 24 hours, as we look back over the past couple of days, it has been an envious exuberance. Exuberant because we've seen the riskier parts of this market really rip, and envious because so many people missed out on this massive rally off the March 23rd low. Here's a take for you. It comes from BlackRock and Mike Powell. He writes the following: the US labor market unexpectedly improved in May, showing signs that policy interventions were cushioning the blow from the shock and highlighting the risk that policymakers may give up on relief measures sooner than necessary. We can catch up with BlackRock's chief investment strategist right now. Mike Powell joins us on the phone. Mike, fantastic to catch up with you. Let's talk about this. You see real risk of policy fatigue, do you?
Absolutely. I mean, I think that we see the policy revolution, really, that we've seen since March as being the key driver and support for the retracement and risk that we've so powerfully seen over the last couple of months. You know, as we step into the summer, as we see some of these cliffs around the small business support, around unemployment support, around states and localities facing difficulty, we're worried that we could go off some of that cliff. And if we do, that powerful policy support for the retracement we've seen could begin sort of falling flat and pose a significant risk to markets.
So, Mike, let's talk about areas of the market that you think might be vulnerable to policy fatigue. I've said repeatedly through the last couple of hours that for every JP Morgan rally, there is a bankrupt car rental company that is absolutely ripped as well. Where's vulnerable? As you look at the rally of the last couple of weeks, what's vulnerable given what you think is about to transpire?
Yeah, so I think what has been a very powerful trade over the past several months, but indeed the past several years, is to be up in quality, see strong business models, strong balance sheets, strong cash flow dynamics. You know, the dynamics we've seen over the past couple of weeks, as you've said, has been the riskier parts of the market, the cheaper parts of the market, the value orientation of the market really rallying strong. We think there's certainly a scenario under which that dynamic continues, but we think against the full range of potential outcomes, including the outcome around policy fatigue that I described, being up in quality, continue to have that strong quality bias is what's going to be most resilient for investors.
Let's talk about the other side of the barbell just a little bit. If you were sitting here and wanted to maintain that cyclicality in your portfolio, what would you put on the other side? Because if it was several months ago, in fact, at the start of the year, most people would have just said treasuries. Treasuries is what I'd like to see maintain those risk mitigating characteristics going into some form of downturn, some form of correction. Has that answer to that question changed now?
So we distinguish between the shorter term horizon and the medium term to long term horizon. You know, in the short term horizon, we do think that there is a case that relative to other government bonds in the world, treasuries still have risk mitigating features in the here and now. But as we turn to the medium to longer term, you know, in the face of trends like deglobalization and in the face of trends that we think could push inflation risk somewhat higher, and with treasury yields being so historically low, we do think that the case for nominal government bonds over that strategic horizon is significantly less.
Mike, I also wanted to talk about the risk of not policy fatigue, but also another wave of infections. It's remarkable to me that over the last couple of weeks, just conversations like you and I are having right now, hardly anyone brings up COVID-19 or coronavirus, just in terms of the possibility of a second wave. If we had those very same conversations several weeks ago, that would have been the dominant discussion as we considered reopening the economy. A friend of mine, someone who I know well from London, Ken Vexler of Acumen Management, turned around to me in the last 24 hours and just said the market's moved on. Do you get the feeling the market has moved on, and do you think it's moved on too prematurely?
Well, you know, I confess up front that I'm not an epidemiologist, so I caveat there. But, you know, my sense is, looking at the expert community, that the coronavirus is still there in the background. And while thankfully we have kind of warmer months in the summer, the ability to be outside, and the opportunity for medicine to race ahead and kind of find better solutions for the fall, I think our sense is it is still going to be there come the fall time, and we probably haven't heard the last of the coronavirus as a meaningful driver of both economics and markets. So we're still very focused on that.
Yeah. Mike, I bring this up because I would never ask anyone on this program to be an epidemiologist unless they are one. I'm asking you as a market participant how you would respond to that data, just as an investor, to establish your reaction function. If we got that second wave of infections, if that infection rate picked up again, and we're seeing that in states across America at the moment, how do you think market participants will respond to that, given that a lot of people think the bar to another lockdown is a whole lot higher?
So I guess I take the view that, going back to the first conversation we had, that it's all about the interaction between the virus dynamics and the policy dynamics. And what we saw in March was, as the epidemic risk peaked, so too did policymakers respond in ways that allowed the blow to be cushioned and the markets to look through it. I think if we see a second wave, the question is going to again be posed, can policymakers rise to the challenge again? And I think, as I highlighted, we're concerned about fatigue in a good state of the world, but we're also concerned about fatigue in a worse state of the world with respect to coronavirus. But that's where our eyes are, that interaction between the two.
Mike, really thoughtful stuff, and appreciate your time, and hopefully we can get you back on the program soon. That was Mike Powell there, the BlackRock Chief Investment Strategist, as we count you down to the opening bell, 20 minutes away, with equity futures declining, rolling over once again, down around about 1% on the S&P 500, negative 31 points. A day away from a Federal Reserve decision. Up next on this program, we'll catch up with Ashok Bhatia of Neuberger Berman on the Fed and the surprise data that we got from this country just several days ago. From New York, this is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The role of central banks around the world has shifted or morphed from, explicit or overt inflation targeting towards implicit and subtle debt management. And that's really what the Fed's doing. It's what the ECB is doing in a much more explicit manner. They're trying to keep the front end of the yield curve at very, very low levels. And in doing so, they're encouraging governments to borrow.
Peter Kinsella there, weighing in on central bank decisions. A decision from the Federal Reserve just a day away. Let's bring in Bloomberg's Michael McKee, shall we? Mike, we've caught up with a few Fed officials over the last couple of weeks on this programme. They've all reinforced, really, the idea amongst many people in this market that tomorrow is too soon to announce anything new. What's your take and what are you dialed in on?
Well, it is too soon, John, to announce anything new because they're going to have to take a look at the jobs report and figure out what exactly it meant. Does it mean we're coming out of this faster? Does it mean the recovery would be faster, or is it a one-off? That's going to be hard for them to figure out. And we have talked to a lot of Fed officials, and they have talked about keeping rates low for a very long time, although they haven't drawn the explicit connection that Peter Kinsella just did to government borrowing. But it does make sense because consumers aren't out shopping really for new homes or cars in any great numbers, so it's not helping them, but it does make a case for keeping rates low. Now, we have seen rates at the longer end start to rise. You look at the yield curves, and pretty much all of them have started to go up once you hit the belly of the curve and you go higher. So the Fed may have an argument for starting to discuss whether they want to push the long end down through QE or yield curve control. As you mentioned, too early to say at this point, but it's going to be a question on the agenda. Another interesting question that's come up over the last few days, as we have seen stock markets make highs for the year, is are the Fed officials who are voting for lower rates blowing a big bubble at the same time? They say they monitor asset prices, but they don't really act on them. So they've got to figure out, is this something that they want to keep doing? The virus response, meanwhile, runs into the social problem that we have had over the last week or so. Equality questions. More than 60% of white families own stocks, either directly or through retirement accounts. 31% for blacks, 28% for Hispanics. Wealth increases, according to the Fed, because of the feedback effect on higher incomes from returns generated by accumulated assets. So can they make the case for keeping rates lower for longer if the stock market keeps going up? The other thing we'll be watching, of course, this week is for their updated economic projections and the dot plot. They haven't put one out since December. This is what they saw in December. It almost seems laughable now. GDP growing 2% this year and essentially next year. And look at the unemployment figures that they were forecasting for these 2 years. Even inflation, we get CPI tomorrow, is expected to be up by 0.3. So we're going to find out what they think is happening in the economy outside of the stock market as well, and maybe get some sort of idea of how they put all of this together. It's a meeting for taking stock rather than taking action.
Mike, just a final question from me, and just quickly, on wealth inequality specifically, we caught up with the former New York Fed president, Mr. Dudley, someone that you know quite well as well. And he said that either you can have a recession, a deep recession and less inequality, or you can have a recovery and more inequality. And that's basically the decision set in front of the Federal Reserve as it supports financial conditions. My response to him was whether it needed to be that binary. Does it need to be that binary? Do you think they need to come up with a better answer than the one they've given for much of the last 10 years?
Well, in a public relations sense, they should come up with a better answer. The problem is they only have the one tool of interest rates. And so it's kind of hard for them to do anything other than lower rates to keep the economy higher and risk a bubble and inequality, or keep rates higher and risk a slowing economy. They're in a very tough position, but since they've been the only game in town, as our friend Mohamed El-Erian says, they don't have a lot of other choices. They get thrust into the center of this.
Mike McKee, I think the news conference tomorrow is going to be very, very interesting. Looking forward to the Michael McKee question coming up tomorrow after that Fed decision. Full coverage right here on Bloomberg TV and on Bloomberg Radio. We can continue our pre-decision coverage right now. We can do that with Ashok Bhatia of Neuberger Berman, the Deputy Fixed Income CIO. Ashok, always great to get your thoughts on a program, so thank you for joining us, sir. Friday was a huge upside surprise, and here we are Tuesday still talking about it. You've highlighted the real risk here of mistaking first movers as an early sign of a really good recovery. Can you walk me through that a couple of steps further?
Yeah, I think, good morning. And, I think there's two main points. I mean, for all the volatility and discussion around the payrolls number, I mean, we're still 21 million jobs short of where we were just, in February. So there is still a deep employment and unemployment issue that's been created by the virus. And I think the second point that relates to that is what we're seeing is, the data suggests that the difference between states that shut down and states that didn't shut down, the differences between economic activity seem to be pretty marginal, which, to us suggests that the driver of this is less the government-mandated shutdowns and the choices consumers are making. And certainly, some of the higher frequency data suggests there are bounce. And, one of the concepts that we're discussing and focused on is whether this is just the people that are most excited to get out, going and engaging in economic activity. And we are going to see a pause on that, and we're going to settle into this new normal of lower, usage at restaurants and things like that, and that this is a little bit of a short-term acceleration that's going to peter out. And, that will probably lead to a little bit more two-way flow in both equity and credit markets.
So, Ashok, down in Washington, D.C. today, I understand that the Senate Finance Committee will be discussing briefly what should happen to the enhanced unemployment benefits, which are set to expire next month. Do you think there's a real risk here that if that doesn't go through, that we've underestimated just how much that has supported consumption, and perhaps we won't be able to pick up that consumption effort in the months to come?
Yeah, I think, and we think that's a critical issue. As you mentioned, this $600 extra payment that ends in July, it has clearly supported income, and to a lesser extent, it's supported consumption. I mean, you've seen a big jump in savings rates, so it's allowed consumers to maintain rent payments and these types of things and weather this storm. The question is, if you cut that off in July, you obviously create incentives for people to go back to work. But if the demand's not there, you're going to end up with unemployment, but without the income support. And that can obviously be a pretty tricky outcome for the markets. And it's going to coincide with the politics. So there's a few things that are starting to develop this summer. I mean, valuation levels in credit markets and equity markets have obviously retraced a ton from the wides. We're going to be entering and debating the election. COVID is still out there. And the fiscal response, which has been so powerful in this, is likely to get to be a bit more two-way as well over the next couple of months, as you mentioned.
So, Ashok, just in a couple of minutes, you and I have discussed several risks, several headwinds to this market. What place do investment-grade credit spreads have being anywhere below 150 at the moment, and why can they grind tighter from here?
Well, investment-grade credit spreads, so, as you mentioned, they're about a little below 150. Before this all started, around 100, wide at 375 or so. I mean, the argument for why credit spreads continue to tighten, which we subscribe to, is the Fed's at zero for a long period of time. Corporate supply in the second half of this year is likely to be down. And there's flows. People need income, and you've seen this into flows into high-yield ETFs and investment grade and all these. Those structural issues are going to be with us for a while, and that's the argument, I think, for why you can see continued tightening over the intermediate term in credit spreads. The credit markets have gone a little bit more two-way in the last 24 to 48 hours. Some of the higher beta names are starting to feel a little petering out here after the terrific rally we've had. So, similar to equities, it's not going to be a straight line, but those drivers of why credit spreads have retraced so much, they're still in play, and we think they'll continue to play out over the next 12 months.
Wanted to make sure we talked about treasuries as well and the role of the long bond in any portfolio at the moment. When do you think demand comes back in? Have we already seen signs of that? And I know it's only one morning where we've got a bid back into treasuries at the long end, but I'm just trying to work out in terms of levels, Ashok, where people like you start to think, you know what? There's some value there. 1% on a 10-year, which might have sounded crazy several years ago, but actually relative to where it was just several months ago, might make sense. When do you start thinking about those things?
Yeah, I think it's pretty close to these levels. I mean, if and it comes down to a little bit of bond math, but if rates are going to be at zero for a couple of years and inflation risk premiums remain low, fair value for 10-year and 30-year securities is probably not very far from here. So I think you will start to see some economic demand come back in. And you and Michael McGee were talking earlier, too, about yield curve control, and totally agree with Michael's comments that it's too early for that for the Fed. But that threat is still going to be out there, and, that's as rates rise, that should also help temper any big rise in 30-year yields from here in particular.
Ashok, really important conversation, and look forward to getting you back on soon. So my best to the team, won't you? Ashok Bhalia there of Neuberger Berman on this bond market ahead of that Fed decision. Vishy Tirupati of Morgan Stanley echoing that sentiment just a little bit, going into this Fed decision, that maybe take the steepener off going into that Fed decision, just to work out how comfortable they are with what's been happening down the longer end of the curve over the last couple of days. And we see the flattener come back in for this morning at least. I have no idea how long that's going to last. 8 minutes away from the opening bell, your equity market shaping up as follows. We are lower by 30 points on the S&P 500. We are negative 0.9%. Coming up next on the program, we'll get you some of the calls from the analyst community on Wall Street. Then later, after a massive small cap rally, we'll catch up with the head of US small and mid cap strategy over at Bank of America, Jill Carey-Hall. That conversation just around the corner. From New York, this is Bloomberg. From New York City, around about 5 minutes away from the opening bell, with equity futures down 28 points on the S&P 500, negative 0.9%. Let's get you some morning calls, shall we? Beginning first up with Bank of America reshuffling ratings in the energy space, cutting Chevron to neutral and upgrading Occidental. The analyst saying strong share performance leaves limited upside to some of the oil majors. Next up, Guggenheim downgrading T-Mobile to neutral. The analyst noting valuation concerns and a tough subscriber quarter ahead. And your third and final call, it comes from Wedbush, optimistic on ride sharing, raising its price targets for Uber and Lyft to $47 and $48. Analyst Dan Ives citing better days ahead with stronger demand as lockdowns ease. We'll try and catch up with Dan Ives over the next week or so. I think this is a really important conversation, not just to the improvement that you would expect going from shutdown to reopening, but where we're seeing upside surprises. We got a flavor of that from Macy's a little bit earlier this morning. Up next, we'll continue that conversation. We'll talk about the small caps as well with Bank of America's Jill Carey-Hall. That conversation just around the corner with futures negative from New York this morning. Good morning. This is Bloomberg.
Commodity investing is more than buying gold and oil. From coffee and corn to cattle and natural gas, many sectors drive the commodity markets. And the Bloomberg Commodity Index covers them all. With exposure across 23 traded commodities, Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil. The Bloomberg Commodity Index.
"25 seconds away from the opening bell in New York City after erasing all of the losses for 2020 on the S&P 500, with every single stock on the S&P positive after the March 23rd bottom. That stat coming from Sarah Ponczek. This market rolls over just a little bit. We're down 28 points on the S&P 500, negative 0.9%. Going into the opening bell with a bond market bid, the yield curve flatter and Treasury yields coming in 6 basis points on a 10-year to 0.81%. And elsewhere, in foreign exchange, the bid where you'd expect the bid to be. The Swissy stronger, the Japanese yen as well. Just a little bit of risk aversion in the early part of the session this Tuesday morning. Let's head out to the market desk and catch up with our markets editor to get you more on the price action. Here is Bloomberg's Scarlet Fu.
Thank you so much, Jonathan. Yeah, it was inevitable that we'd get some kind of pullback here, and the reversal is happening across regions and across asset classes, as you mentioned. I'm watching some of the most heavily traded travel type names. We're looking at Hertz, for instance. The car rental company had gone from sub $1 to above $5, erasing its post-bankruptcy drop in the process. American Airlines had a similar trajectory, taking it from $9 in mid-May to $20 yesterday. All of that coming off a little bit here. Nikola, though, is still seeing plenty of risk appetite. This is the newly listed battery, electric, and hydrogen fuel cell truck maker. No revenue right now, not expected to book $1 billion in revenue until 2023. Nevertheless, it is continuing to see a bid higher. Now, Bob Sinch of Guggenheim reminds me that a lot of these travel type names are all due to short covering, the rally that we've seen, the sharp recovery there. But keep in mind as well that these beaten up cyclical names are also retail investors' preferred places to go to as the economy reopens. If you look at the Robinhood platform, they have seen the largest increase in interest. And that's clearly where the momentum has shifted in the last 5 days, which means that what we consider a momentum stock is also changing as well, Jonathan. If you look at the Morgan Stanley U.S. Momentum Long Short Index, it goes along the fastest rising names in the Russell 3000 and shorts the biggest losers. Last week, it tumbled 25%. Now, these indexes rebalance on a monthly basis. So eventually, if the gains in these cyclicals beaten up names persist, it'll eventually be considered long momentum, and you'll see that reflected. But so far, that's not the case. Jonathan?
Scarlett, just before we let you go, can we just bring up that name, Nikola, once more? Within Wall Street and the Wall Street community, I think everyone knows what we're talking about. From outside, to see this name, which I'd never heard of until the last couple of weeks, with no revenue, have a market cap similar to Ford, what on earth is going on?
It's risk appetite. Everyone's getting back in, and it's fear of missing out. Clearly, timing could not have been better for this company that just went public a few days ago. Jonathan?
Absolutely unbelievable to see this stock bid up in the way it has been over the last several days. Scarlett, appreciate your time. We'll try and catch up with you a little bit later. In this market, we pull back a little more than 1 percentage point on the S&P 500. We're negative 0.6% on the NASDAQ as well. So a little bit of outperformance from some of the more defensive tech names perhaps this morning after a huge cyclical rally over the last several weeks. We have gone from growth to value, from large cap to small cap. Here's the take on the latter from Bank of America. Jill Carey-Hall and the team writing the following: while small caps have seen some tactical benefit given reopening optimism over the medium term, we continue to prefer large over small. Jill Carey-Hall, I'm pleased to say, joins us now. Jill, always great to get your perspective and insight. Walk me through that. Why are the large caps likely to outperform small caps over the medium term?
Hi, thanks. Great to be here.
Yeah, I mean, certainly there's been this optimism rally around the reopening, and really the equity market has been fueled by liquidity and stimulus. But I think thinking medium term, we still see some challenges to small caps. When you think about, obviously there's the initial bounce on reopening. We had the really strong jobs number, but our economists see getting to full employment as we move past this initial bounce a little more challenging. And I think when you think about some of the industries that are likely to be secularly challenged, like some of the traditional retailers, travel and leisure, some areas of REITs, small caps have about double the earnings exposure to these areas as large caps do. And as I pointed out before, obviously, the size segment still has a lot of fundamental challenges like record leverage, a kind of near record proportion of stocks with no profits. And that was even before heading into COVID. So I think there's still some risks. And when you look within small caps at, some of the factors that have been outperforming, even though we've seen this risk rally and some of the higher risk stocks doing well, investors are still honing in on some of those factors like leverage and liquidity within small caps, where stocks that rank poorly on those metrics are underperforming. So, I think there's still some challenges to the size segment, but even within small caps, there's still a lot of areas for opportunity for investors.
Well, let's talk about the opportunities briefly. I know you like the financials, and you think that's the strongest sector versus some weakness elsewhere. Can you walk me through that, Jill?
Sure. I think financials are one area that rank favorably in our work, both within large and small caps right now. As we've seen some macro improvement, and as we've seen interest rates move off the bottoms, that certainly creates a more favorable environment for some of the banks. I think from a dividend perspective within large caps, we do see that as an area where cash return from a dividend perspective can hold up better than some areas. And financials within small caps do rank as one of the more favorable sectors within our work. So if we see a broader, rotation into value within the market over the next several months, which is one thing that we expect, I think this is one value sector within both small and large caps that ranks favorably. I think, overall, we see the value rotation. There's a lot more higher quality value up the cap spectrum. One of the problems with that a lot of value investors are facing in small caps is value has become increasingly synonymous with low quality and leverage within small caps. But I think, within financials, this is one sector that the two sort of align.
Valuations just hasn't been part of the broader discussion for the last several weeks. It barely comes up in conversations that I have with people, but I want to talk about valuations. You've pointed out, like many have, that at a small cap level, I think we've got record high forward PEs, and I'm trying to work out, Jill, at this point, where we're going to see positive earnings revisions in the months to come going into the back end. At a sector level, and I know you can't do a stock level with me live on air, but if you could get to a sector level with me where you expect to see that happen at the back half of this year.
Yeah, I mean, as you mentioned, I think, we're at the point where valuations on an absolute perspective, especially on earnings, as earnings have plummeted, have gotten stretched, particularly in small and mid caps where the PE ratios right now are at or near all-time highs, a little less extended in large caps. On a relative basis, that's where, small caps look cheap relative to large, based on where they usually trade. Valuation typically isn't a great timing indicator if you're a short-term investor. It does tend to matter a lot over the long term, we found. So, I think the bull case for small caps, if you're an investor with a long time horizon, is favorable right now in that, the relative valuations are supportive of long-term returns. Secular underperformance cycles in small caps usually last about a decade. We started one about 7 years ago. So that could be, a good portion of the way through. And also if we see, over the coming years, this move from, global to local and reshoring of U.S. manufacturing and CapEx, that could benefit smaller caps and domestic companies. So longer term, there's definitely the case to be made. And more near term, as you said, I think, downward revisions are still happening. We're still seeing very weak trends, potentially a slowing in the estimate cuts. We could see that in the next month or two. But from a sector perspective, I think, a lot of the areas that, like energy has still been problematic. Some of the cyclical sectors, we could see a slowing in the revision trends as we reopen. But overall, small caps, are expected to see about a 50% earnings decline this year. Large caps, somewhere between a 20 to 30% earnings decline. So we don't expect earnings will necessarily get back to their prior peaks next year. Our economists are not looking for a V-shaped recovery. We might see that initial V off the bounce, but then as we move into the end of the year, things are going to get a bit more challenging, especially as we see risks around the election or, as this trade war continues to re-escalate. That was obviously one of the key reasons small caps underperformed in 2019 was due to trade tensions.
Jill, a conversation for another time. You've been brilliant. Appreciate your time this morning and appreciate your insight. Jill Carey-Holder of Bank of America. In this market right now, 9 minutes into the session, we declined 0.9% on the S&P 500. Let's head back to the market desk and get you some more stock-level price action and a sector-level feel. We can do that with Abigail Doolittle.
Well, John, all that sparkles is not gold, at least for the jewelry company stocks today. We're looking at a bit of a mixed picture. We have one winner, and that is Tiffany. So despite the fact that they actually posted comp sales that plunged 44%, and they put up a loss of 53 cents that was double the estimate. We see that stock higher after the company has committed to be bought by LVMH, not surprisingly, on that sales plunge. So investors are taking some comfort in that. Not so much, though, for Movado or Signet. We also had big sales declines at both of those companies. For Movado, sales plunged by 52% in the first quarter. Most of their stores are shut until July. Signet comps dropped 39%. They've reopened the bulk of their stores, but here in the U.S., they won't be reopening 150 stores at any point, at least right now. They've suspended their dividends. So it's very clear that this discretionary spend has not done well, not surprisingly, during these pandemic conditions. Now, turning to the commodity complex, big oil and metals and miners. We, of course, have a slide in the commodity complex today consistent with the risk asset slide that we're seeing for stocks. That is taking down the likes of ExxonMobil, other big oil names, along with the metal and miners, Alcoa and U.S. Steel, another piece of today's risk off. And on the year, John, it is worth noting the Bloomberg Commodity Index is still in a bear market, down about 20%. The S&P 500 just about flat right now. When you have that sort of a divide between the risk assets, it may point to more volatility ahead. John?
Thank you very much. We'll catch up with Abigail a little bit later in the program. 11 minutes into the session, I think it's really important to recognize that what we've seen over the last several weeks has not just been a cyclical rally, a rotation into the healthier financials, at least if that's what you think they are. It's also been exuberance in places that maybe you would not have expected, without naming any names, in bankrupt car rental companies, which have absolutely surged, even though they are technically going bankrupt. In electric truck makers that you'd never heard of several months ago, that have never booked any revenue and now have a market cap very similar to a company like Ford. That is real sign of exuberance. And maybe it's a little too premature to have this conversation. The Federal Reserve aimed to divorce financial conditions from the economy. That was the objective. And I just wondered tomorrow in the news conference whether they get asked about whether they've done too much already. From New York City this morning, good morning. Up next on the program, Jack Manley of JP Morgan. This is Bloomberg.
Corn, livestock, precious metals. Commodities are everywhere, and so is Bloomberg. Bloomberg Commodity Indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
14 minutes into the session, your equity market shaping up as follows: down 0.8% on the S&P 500. On the Nasdaq, we're down by just 0.25%. The outperformance coming on the Nasdaq. You can flip the rally on its head over the last several weeks, just in terms of the sector composition of the sell-off today. It is energy and financials that have led the gains many, many days when we've had the rally of the last several weeks. This morning, they lag. They underperform the broader equity market, outperforming healthcare, as you might expect. Here's a take from Morgan Stanley on the financials. It comes from Graham Secker, who writes the following: recent outperformance from European financials, peripheral stocks and value names look quite extreme in the very short term. From a longer term perspective, these assets are still close to all-time lows. We see material further upside. To weigh in on that, I'm pleased to say Jack Manley, JP Morgan Asset Management Global Market Strategist, joins us now. Jack, fantastic to catch up with you. Let's talk about the financials. I know you're constructive too. Why?
Well, I look at financials right now, and I see that sector as one of the few sectors that's gotten kind of punished over the last few months that probably actually hasn't deserved to be punished. Financials don't have the same underlying issues that we're seeing in things like airlines, hotels, restaurants. They're taking one-time hits because of short-term cash flow concerns, but borrower quality is still very high. You add on top of that the fact that mortgage rates, auto loan rates, credit card rates are still quite a bit higher than the rate that a lot of these banks are going to be paying you on your savings account. I see a lot of room for money to be made in these businesses. I see a much more resilient recovery in this sector than I do in some of the other more harder hit parts of the market.
Jack, I know the price shapes narrative, but seriously, a couple of months ago, I'd asked people about the financials. We already had the buybacks cancelled. They were seriously worried about dividend risk. Are we now seriously sitting here and thinking about capital return programs coming back and coming back quickly?
I think it all depends on how you define quickly. I think if I'm looking at something like financials compared to, say, energy, yes, it will be relatively a lot faster than something like energy will be able to continue to pay out dividends. I think the problems that are facing financials are much short-term in nature. They're not as structural as what we're seeing in something like energy, as what we're seeing in something like industrials. Do I expect financials to resume their dividend payouts in the back half of this year? Probably not. Do I think that they'll be paying out their dividends a whole lot faster than airline stocks will, than some discretionary names will? Yes, I do. And when I see financials as being one of the biggest contributors to dividends in the S&P 500 from a total market capitalization perspective, I think that is incredibly important for investors that really are having a hard time finding yield in today's world.
Another thing we're having difficulty with is establishing just how well we're reopening these economies. New York City, that process starting just yesterday in phase one. We've seen several cities, several states, several countries for that matter, well advanced now. I'm trying to distinguish between just the sequential improvement and the upside surprises. And when you hear from several of the airlines, American last week, and you hear from the likes of Macy's this morning, it seems that the companies themselves, just in several areas, still operating well below capacity, but are surprised by how quickly things are recovering. What's your take in the early stages, Jack?
I think that the reopening, at least speaking from here in New York City, is fantastic news for smaller businesses, these mom and pop shops that have been shut down for the last several months that have been able to gradually reopen. A lot of the bigger stores have been open just in sort of fractional capacity. You can only pick up or take deliveries. They haven't been hurting necessarily as much. I do see demand coming back. I think overall it is a good thing. But, John, you mentioned airlines in particular. I don't see people racing to get into a middle seat on an airline anytime soon just because social distancing protocols are being relaxed, just because the economy is gradually reopening. I think the pain felt in some of those sectors that are most heavily exposed to social distancing, whether you're sitting next to a stranger on an airplane or sitting next to a stranger in a restaurant. These are things that are going to persist. until at least we get a vaccine, hopefully at some point next year. And frankly, there's even room for something like a hangover effect after that. I wouldn't be surprised if people were still nervous about getting on that airplane or sitting down at that restaurant for months, if not a couple years, after the health crisis itself is truly resolved.
And this is why managing your cyclical exposure over the medium term, I think, Jack, is going to be really important. The sectors you're in and how quality some of the names you're holding are. Jack, outside of the financials, what would you be avoiding at this point?
Well, I think a lot of the commentary earlier kind of suggests where I'm a little bit bearish. I'm not a big fan of industrials at the moment, particularly those airline names. John, you mentioned that they're leading the sell-off today alongside a number of the other more recent winners. I think they were overbought over the last couple of weeks. I think that issue that I mentioned with capacity constraints for quite some time is going to be weighing on that area. I'm also not particularly bullish on the energy sector. I don't know if I'm as bearish as I am on say industrials, but I see downward price pressure on oil for quite some time, even after this health crisis again is resolved and global demand starts to pick up. We still have China transitioning from a manufacturing economy to a services economy. That puts downward pressure on demand. We see a re-escalation in trade tensions between the U.S. and China. That uncertainty is going to put downward pressure on demand. I see oil prices being relatively range bound, not sure how much higher than $40 a barrel they can really go. And when you consider that even at that price, so many U.S. oil producers are not profitable, I see a fairly poor outlook for that sector, at least over the next year, if not longer.
Jack Manley of JP Morgan Asset Management. Jack, always great to catch up with you, mate, on this market. Thank you very much for joining us after a massive rally over the last several weeks. We correct just a little bit. I want to head back to the market desk and peel this one back and get the sector level price action. We can do that with Abigail Doolittle.
John, not surprisingly, with that modest, a solid decline for the S&P 500, the worst day in about 3 weeks, we are looking at a risk-off tone sector-wise. When we use the IMAP and the Bloomberg terminal, first of all, you see all 11 S&P 500 sectors are lower. 7 are down by more than 7%. Jack Manley's having a good day. The worst sectors on the day: energy down 3.9% in sympathy with oil down, industrials down 2.4%, utilities, financials, real estate, all of those cyclical sectors taking a bit of a breather today after the big rally. Up top, the more familiar trade on the year, the stay-at-home stocks, really in control there: healthcare, communication services, and tech. So basically big tech, internet, and the healthcare sector, that stay-at-home area, is outperforming with very, very small declines. However, over the last 5 days, John, as you know, it's been all about those cyclicals. If we take a look at the last 5 days, we are going to see very big gains for energy, financials, industrials, and real estate. Complicating it, though, John, on the year, those are the worst sectors. So it's going to be very interesting to see how this one shakes out. But today, the cyclicals taking a little bit of a breather.
Abigail, just briefly on the technicals, I read a stat from our team at Bloomberg this morning. 98% coming into today, 98% of S&P 500 members trading above their 50-day moving average. 98% coming into today. Abigail, on a technical basis, just how rare is that?
I don't know exactly, John, although I can say it is very rare. I saw something recently that what we're seeing right now with stocks above the 50-day moving average, I think has happened only 5 times in history or something along those lines. So very rare. But you were using the word exuberance earlier. To me, that would signal a strong degree of exuberance, considering that not so long ago, only less than 20% of stocks were above the 200-day moving average. So it really just shows you the huge swings and uncertainty out there on the part of traders and investors.
A rapid rally off the bottom. Abigail, appreciate your time on the fundamentals and the technicals as well. In this market right now, 22 minutes into the session, your S&P 500 corrects just a little bit, down 1% on the S&P. The outperformance, relatively speaking, coming from the NASDAQ. We're down just 0.4% there. Up next, we'll get the trading diary to get you in shape for trading through the next couple of days into the end of the week with the Fed on deck tomorrow. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Taking some weight off the S&P 500, we shave 1% off the S&P, just a little bit lighter, sitting at 3,200. The outperformance, relatively speaking, coming from the Nasdaq. We're down just 0.25% there. Here's your trading diary for the following week. At the top of the hour, we get U.S. wholesale inventories. The IMF's managing director will be speaking at 10:30 a.m. Eastern. The president meeting with Secretary Mike Pompeo at 2:15. On Wednesday, we get a Fed rate decision and a news conference with Chairman Jay Powell. A little bit later in the week, of course, we get initial jobless claims and continuing claims this Thursday. Then finally on Friday, the University of Michigan Sentiment Survey. From New York City this morning, good morning to you all. That does it for me. If you want to reach out to me, I am on Twitter at FerroTV. This was the countdown to the Open. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience.
Consistency is more important than volatility.
There's very likely to be a decoupling between the United States and China.
Look, I think the reality is this is highly unusual.
This is a really good example of the intersection of business and government.
Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look into him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He's all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things in life happens. You know, I'm here by myself.
So ¿dónde vive acá? En la parte de
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. Jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry SIPI?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan War Logs, 390,000 documents known as the Iraq War Logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFaul.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it is widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. election.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to say, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强，就强它的硬件，强就强它的系统建设，这一方面确实比我们早。但是玩信息玩软的，中国人的脑袋绝不比我们长。我们在座的所有人的脑袋绝不比我们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's in Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Valuag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
– 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The US was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the US commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and US states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lite-Brite comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
A bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker, so when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect the pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. It's got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
This is Rich Chigga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I like, you know, I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with Dat Stick like 2 weeks later.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chigga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chigga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did a sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chigga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, and it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a chigga like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
"It's just Taco Bell, what could possibly go wrong?"
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
He's
oh my God!
That's my dad, son.
Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the Connected Rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board, thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures. Whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify Route 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってあり。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims,
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portray them to be quite strict in my videos.
Oh, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Vinous.
Antonio, tell me, what are you trying to build at Vinous?
Well, at Vinous, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Vinous is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You merged with one of his chief rivals, and you just hired his successor, Neil Martin. So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Lara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing in a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers. Yep. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, etc., sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will.
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, you know, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, you know, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturer, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So, because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube, it is Tuesday, June 9th, 2020, and Tuesdays once again. Wait a minute.
I love that. It really is. I mean, and I feel like a lot of Tuesdays we're getting this after big news on Monday, whether it's market-related, virus-related, or something else, business, corporate-related deals, obviously driving the conversation yesterday. Today, in part owing to the Fed kicking off a two-day meeting, it does feel like markets and even companies are saying, oh, okay, hold on. Let's figure out what's actually going on here before we get ahead of ourselves.
It's like everybody woke up, you know. Those Mondays are always a little crazy. All right, we got a lot to cover over the next 4 hours. Let's get you going, though, on this Tuesday. Wait a minute, Tuesday. Let's check in on the trading day with Charlie Pellet. Hey, Charlie.
Well, hello there. A lot going on this Tuesday. I'm keeping an eye, first of all, on the NASDAQ 100 index, trading above 10,000 for the first time ever. Right now at 10,004, it is up by 1%. NASDAQ 100 index, 99.99 right now up. NASDAQ, I should say, at 99.99, up 75. That's a gain of 0.8%. Year to date, look at that, up 11.5%. S&P down 12, a drop there of 0.4%, retreating somewhat from yesterday's rally. The Dow down 185, a drop there of 0.7%. 10-year up 17.30 seconds with a yield of 0.81%. Gold up 1%, 17.15 the ounce. Crude flat right now, West Texas Intermediate, 38.19 a barrel. Just want to mention one other story I'm keeping an eye on. May get some more developments with this later on this afternoon. 2 tankers sailing toward Venezuela have turned around. 3 others have left Venezuelan waters. It comes as the Trump administration is preparing sanctions on as many as 50 oil and fuel tankers, all part of an effort to cut off trade between Iran and Venezuela. That's according to sources. Again, developing story, one we're watching for you here at Bloomberg. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week. We'll be checking in and checking out Charlie Pellet throughout the course of the show. Right now, let's set the Business Week agenda, though. As Charlie laid out, a lot to get to and sort of some mixed messages on the equity markets on this Wait a Minute Tuesday, as Carol Massar said. Let's bring in Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence. She's on the phone from New Jersey. Also joining us from New Jersey is Dave Wilson, Stocks Editor for Bloomberg, author of the chart and the stock of the day. So, Dave, take us inside the market a bit. We heard the top-line numbers from Charlie Pellet. What do you make of this?
Well, it really is sort of a reversal to some extent of what we've seen in the past week or so, especially what we saw yesterday. The kinds of stocks that were rallying big time are coming down big time. You know, think about the airlines and the cruise lines, and especially the oil and gas companies. I mean, the best example there, Chesapeake Energy. Over 2 days, the shares rise fivefold. And today, they're down 60%. We reported that there may be a bankruptcy filing coming. And in fact, you just don't see those kinds of moves on a normal basis. That's one side of the story. The other side of the story is what's going on with NASDAQ. As Charlie Pellet mentioned, the NASDAQ 100 index, representing the biggest companies in that market, above 10,000. We saw the NASDAQ Composite, a broader gauge, also managed to get above 10,000. It's pulled back a bit. Nonetheless, you're talking about the first time that these indexes have crossed this 5-digit threshold. And I was looking at the NASDAQ 100, and it comes down to the kinds of companies we talk about all the time in terms of today's gains. Facebook, Amazon, Microsoft, Apple. Put them all together, and without their gains, the NASDAQ 100 would be down. So it's kind of typical as far as that goes.
Definitely seen this movie before. Gina Martin-Adams, I got to tell you, I got a stack of stories in front of me about froth and stocks starting to bubble over, the rally making a mockery of even the usual optimists, the smart money finally ready to chase the mom and pop rally. Help me make sense of the run-up. What kind of research are you guys writing right now?
Yeah, so I think fundamentally the reality is that the Fed changed the game. The Fed and the fiscal body changed the game by creating a mass explosion in multiples, and that's taken a lot of people off guard. And, most of us are sort of fundamentally anchored, and we look at the economy, which is still extremely weak, and then look at the stock market, which is, now up on the year or basically flat on the year, and it seems a bit confounding. But the reality is that the Fed changed the game. They changed the multiples expanded. And now we're to a point, though, where we've reflected that multiple expansion, and we think, what next? Well, the what next is what's going to happen with earnings? How are the economic reopenings going to progress? Will we really see recovery in some of these beaten-down cyclical stories, or is it really the case that the big cap techs and communication stocks of the world and some of the bigger, more stable consumer and healthcare companies are the only game in town, the only companies that can really produce any kinds of fundamental growth? So I do think we're at a bit of a turning point in the market where we've seen our re-rating. Now's a question of a little bit of show me going forward that these prices are justified. And then it's naturally going to create, I think, a little bit of a wobblier, rockier market.
Yeah, I mean, right? Like, how much are we going to let the market be okay with the market running ahead of itself, Gina, looking forward to the optimism on the other side of this when we still have a lot of questions, right, about what it looks like?
Yeah, there are a lot of questions, and I do think we're going to go through the process of figuring that out. I mean, what I will say, though, is that expectations are rock bottom. So I do think it's important to distinguish between multiple expansion, which has driven the market, and that multiple expansion is not multiple expansion on an expectation of improving growth. It's multiple expansion simply because investors are getting their hands forced. I mean, the Fed has done everything under the sun to just really create an explosion of liquidity, and that's what's created multiple expansion. When you look at analyst forecasts, just to put some numbers behind this speak, analysts are anticipating just a 1.5% pace of growth in the first 12 months of this recovery after our second quarter low. That's almost unheard of. I mean, your average growth in the first 12 months of recovery is 10%. We're baking 5% into our model, and analysts are only expecting 1.5%.
Wow.
That's prime ground for potential economic surprise to really propel earnings estimate revision. And that, I think, is the potential surprise going forward is we all think the market is mispriced, but the reality is the market is pricing Fed policy. I don't think the market has at all priced a really robust earnings recovery. If we get any sort of inkling that we're going to have some recovery, that can make a big difference.
It's quite a range.
Yeah,
potentially.
Seriously. Well, and some low expectations, as Gina said. Gina Martin Adams, great to catch up with you as always. Chief Equity Strategist for Bloomberg Intelligence on the phone from New Jersey, along with Dave Wilson, stocks editor. He'll be back a little bit later on with his stock and chart of the day. Meanwhile, we are going to check in on the virus, where we're going. We're hearing some things from the WHO, but then they're coming back and saying, like, well, you sort of misunderstood what we were talking about when it comes to the asymptomatic spread.
I'm just like, wait, what?
Seems like kind of a big thing that you need to get right.
Yeah,
saying.
Exactly. So we've got a great guest, the chairman, president, CEO, and founder of Tonix Pharmaceuticals. They are working on actually a vaccine for the virus, so we'll check in with him, see what he has to say about that latest news from the WHO. And then we'll talk a lot about brands and consumers, Jason.
Absolutely. We're going to have the CEO of Casey's General Stores back with us. He's been on the job a year. Obviously didn't take this job anticipating a global pandemic and everything else that's been going on. So we'll check in with him on his 1-year anniversary. And then Emily Hayward is going to be with us. She's got a new book out today, very timely. It's called Obsessed, Building a Brand People Love from Day One. People are caring about what they're buying and from whom these days.
I'm obsessed with the brands that she's worked with, Allbirds, Casper, Birchbox.
Yeah.
We all know them well. Speaking of brands, we've got the debut of a great brand, Bloomberg Green Magazine. It includes one of the most read stories that's in the Bloomberg Terminal, or on the Bloomberg Terminal. It's about Disney's Jungle Cruise, and it's, nope, not about a theme park ride.
No, and it's written by our Pulitzer Prize-winning writer, Zach Matter. Can't wait for that. All right, let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Today's number, Carol, it's $12 billion. Taiwan Semiconductor Manufacturing Company, TSMC as it's known, has secured government subsidies for its envisioned $12 billion chip plant in Arizona, moving closer toward finalizing a facility designed to allay national security concerns and shift high-tech manufacturing to the U.S. That, of course, is the main chip maker to Apple and Huawei. That's a big deal.
Oh, my God. That is such a charged story on so many different angles. So certainly something we'll be following over the next few weeks and few months. All right, let's get a check on world and national news headlines. For that, it's Nancy Lyons in our D.C. studio. Hi, Nance.
Hey, Carol. George Floyd will be laid to rest next to his mother today at Houston's Memorial Gardens, 2 weeks after his death spurred a movement against racism and police brutality. He was sent off with music and tributes at his funeral. Floyd died while being held down by Minneapolis police. At his funeral earlier today, Ivy McGregor was among those paying tribute.
I leave with you one word, his final word, which was breathe. And breathe is not passive. No, sir. No, ma'am. Breathe is active. Breathe is inhale and exhale. Breathe is to be alive. And so we stay with this family. As you breathe, we breathe with you. God bless you.
Demonstrations continue across the country and the world. His death has reinvigorated the Black Lives Matter movement and raised demands for racial justice. A majority of Americans believe the killing of George Floyd represents a broader problem with law enforcement. The Washington Post SHAR poll found that more than 2 in 3 Americans support the nationwide protests. Only 35% of those surveyed said they approve of the way that President Trump is handling the unrest. 61% are disapproving. Voters in several states are casting ballots in primaries today, including Georgia, where officials say some voting machines are not working properly. Poll workers are apparently having some trouble operating the newer model machines. Global news 24 hours a day on air and on quick tape by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thanks so much. You're listening to Bloomberg Business Week, and just a quick note on one of the things that Nancy mentioned in her national newscast. I was listening to the local NPR station down in Atlanta this morning, as I often do in the morning, and they were already reporting, this is in the 7 o'clock hour, about these machines not working or not arriving and people not being trained on them. It is going to be a really important story to watch because it's primary season, but this is a prelude to what we're going to see in November, and it's it's really, really an important story.
I'm really wondering, I think about how many stories we've done in the magazine about this in terms of technology and spending and where, states are getting money from. And here we are almost 4 years, right, after the problems with the last presidential election, and we still kind of haven't figured this out. And that, I find it, I can't even get my head over it. We knew we had a problem. It seemed like a relatively easy fix, and yet here we are still kind of stumbling our way through. And to me, this is going to be they're all important elections. This one's a really important one, and it needs to be very clear in terms of the process and the outcome.
Right. Well, and a lot of the things that are going on in some of the primaries is deciding who's going to be up for, some of the big elections.
True.
In Georgia, notably, as you probably remember, both of their U.S. Senate seats are up, owing to a resignation and then sort of the normal course of business. Interestingly, speaking of senators, the FDA being accused of misleading U.S. senators on China's role as a U.S. drug supplier. This is a huge story, too, in terms of how we get to a vaccine. We're going to be talking about vaccine coming up in just a minute, but the relationship between drug makers in the U.S. and China and the governments, it is a fraught one.
And it's complicated. Just like, car manufacturing, it goes back and forth and there's parts moving around the world. Drugs often pass through multiple companies as raw ingredients, become active ingredients, and then are turned into pills or injections. So this is really crucial. We saw that, we were looking at where we were, really relying on our supply chain for pharmaceuticals. That certainly was unearthed, if you will, during the virus. You're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down Tuesday, at least for the Dow, the S&P. NASDAQ keeps on going at a record NASDAQ 100, topping 10,000 for the first time. Stocks have paired losses as a rally in technology giants offsets concern over valuations and economic prospects. Here's where we stand right now with the S&P down 17, retreating by 0.6% from yesterday's surge. The Dow is down 224, down 0.8%. NASDAQ up 59. That is a gain of 0.6%. 10-year up 16.30 seconds. Yield now 0.82%. Gold advancing 1%, 17.15 the ounce. And crude West Texas Intermediate now up 1%, 38.60 a barrel. Recapping, equities mix. NASDAQ at a record, up 58 points, up 0.6%. S&P down 17, down 0.5. The Dow is down 0.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much for that update. So we want to get to our virus update, which we do every day. And we've got a great guest to talk about what's going on. Tonix Pharmaceuticals, it's among several drug companies working on a COVID-19 vaccine. So let's get into it with Dr. Seth Lederman. He's chairman, president, CEO, and founder of the New York-based specialty pharmaceutical company Tonix. He joins us on the phone in Massachusetts. Dr. Lederman, it's nice to have you here with us. I want to get into, and we want to get into what you guys are doing, but I've got to ask you about the latest news involving the virus. And we've all been talking about the World Health Organization coming out and talking about asymptomatic transmission of the virus and saying it's very rare. And I know a top WHO official has now come back out and kind of downplayed her comment. So I don't know. How do you make sense of this?
Well, first of all, thank you very much for having me on the show. And thank you for covering the COVID-19 story so effectively. It's important that knowledge is power, and everyone is in this together. Thanks for asking about the WHO recommendations. I would say generally that people should err on the side of caution. It's hard to know what's safe and what's not safe, but people making individual decisions should be cautious. I think that I find some of the information compelling, that being outside is better than inside with people. I think that staying 6 feet apart, wearing a mask, washing hands are all very important. So this new thought about asymptomatic transmission is something that people can put into an equation, but I wouldn't use that to engage in any behaviors that don't follow the basic tenets.
So as we think about a vaccine, Doctor, I mean, it is the thing everyone's looking forward to in so many ways. You are, as Carol said, right in the thick of this. Help us understand what's realistic, what you are seeing, and how this development, which feels different to those of us who don't normally pay so much attention to how vaccines are created, how it is or isn't different from what you normally see.
Well, first of all, I think that there's a remarkable effort going on all over the world, many companies, and it's really exciting to see how governments, nonprofits, companies have come together with a common goal of doing something about this. I agree with the general belief that we really can't get back to work and back to school in the same way that we now look back on as called normal until there's a vaccine. So a vaccine is very important. And one of the exciting aspects of this is that so many different technologies are being tested. I think it's realistic that there will be a vaccine either late this year or early next year, but I'm not sure that that would be the vaccine that will ultimately win market acceptance and the confidence of doctors and patients. So there's an element of the tortoise and the hare here, where there are some companies that are very fast out of the gate. They have exciting technology, but there are other companies like ours that are going more slowly and have different technologies. And I think that COVID-19 will be with us for a long time, so it will be possible to figure out which vaccines are best in a public health sense.
See, and I think you bring up a brilliant point. And forgive me because there's some confusion. Is it Lederman or Letterman? We pride ourselves on getting it right. Letterman.
Letterman. Thank you very much.
No, we like to get it right. So, Dr. Letterman, explain the science. As you say, there's different technologies for the virus. So explain that, because you're right. There is this huge race going on. The government is involved too. What are the different technologies we're talking about, and how that affects the, efficacy of an ultimate vaccine?
I think the simplest way to divide the different vaccine technologies that are out there is to think about the two main components of the immune system, and that is either antibodies or T cells. And I think that vaccines are designed to stimulate either antibody responses or T cell responses. Antibody responses are shorter lived and tend to stop an infection from happening, and T cell responses are longer lived but tend to eliminate an infection after it's happened and also clear the bloodstream and the body of the virus. Now, those are the extremes. Just about every vaccine will have elements of both, but I think that dividing them up into whether something is more antibody or more T-cell focused is a good way to divide the many technologies being thrown at this.
Do we need both, or do we need the T-cells, which to me sounds like a bigger deal, just quickly? And then we'll come back and talk a little bit more. Yeah,
we need both. And but there are flavors within both. But for example, it's probably true that an antibody test is a good sign that someone has recovered from the illness and has some level of immunity. But antibodies without T cells is probably not a solution.
All right, we're going to continue this conversation because we've got a lot more questions for Dr. Seth
love
Letterman,
this.
CEO of Tonix Pharmaceuticals, right in the midst of arguably some of the most important work that's going on across the world, and all eyes are on a vaccine. Carol,
But
I mean, it's just that simple.
And it's understanding. I feel like I'm talking with my sister who's in the medical world, talking about the science of it, right? Understanding how do you really make a difference, with this, and especially when we see headlines about, a vaccine's just a few months away.
Because go figure, like everything else in life, it's a little complicated. It's not just about can we just get a vaccine here, please?
It's Wait a Minute Tuesday.
It's Wait a Minute Tuesday.
All right, we're going to continue talking with Dr. Seth Letterman of Tonix Pharmaceuticals. You're listening to Bloomberg Business Week. Carol Massar, Jason Kelly, we are Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, well, coming up, we are going to continue our conversation with Dr. Seth Lederman in Massachusetts. He's the CEO of Tonix Pharmaceuticals, and as we said, just right in the midst of arguably the biggest project of our time.
I feel like I'm in a science class, which I really love because it helps us understand the search for a vaccine. All right.
Well, and I want to understand that nexus of sort of science and society and how we should be thinking about it and what it means for us in the next 6 to 12 months.
All right. A lot to get to. First up, though, quick check on your top business stories. Hey, Charlie Pallett.
Well, hello there. Quick check indeed. Thought to ponder. I'll give you the answer in just a moment. What do you think Victoria's Secret pays on rent for one of its Manhattan stores? I'll tell you in a moment. Stocks pairing losses as a rally in tech giants offsets concerns over valuations and economic prospects. Right now, we have got the S&P 500 index declining 20 points, down 0.6%. The Dow is down 245, retreating from yesterday's rally, down 0.9%. NASDAQ keeps on going at a record up 45, 99.70. That's a gain of 0.5%. The NASDAQ 100 index did trade above 10,000 for the first time. 10-year up 15.30 seconds with a yield of 0.82%. We've got gold up 1%, 17.16 the ounce. West Texas Intermediate crude up 1.9%, 38.91 a barrel. As more of the U.S. economy reopens for business, there is a warning against complacency when it comes to the spread of the coronavirus. Nasa Ernst is nurse manager at the Johns Hopkins Bloomberg School of Public Health. She was interviewed this morning on Bloomberg Television.
One of the things that we have noticed is that the transmissions that we have seen among employees primarily are in situations where social distancing, like in a break room, may not be as strict as it is in another area. So we've really gone back to those basics of the masks, the social distancing, and the sanitizing.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Macy's shares now trading lower after announcing it has reopened 450 stores in some capacity. Macy's shares, they are down now by 7.6%. The owner of jewelry chains Jared & Kay will not be reopening hundreds of stores following the pandemic shutdown. Signet Jewelers also owns Zales, shares plunging today by 16%. Also, Victoria's Secret and its parent company L Brands suing the landlord of their flagship store in New York's Herald Square, arguing the coronavirus pandemic has rendered it, quote, impossible to continue paying almost $1 million a month in rent. I'm Charlie Pallett. That's a Bloomberg Business Flash.
Wow, Charlie, that is a big number for sure.
Totally. Yeah, no doubt about it. All right, let's get back to our guest. Continuing to talk about what's going on with the virus and, of course, the search for a vaccine. Dr. Seth Lederman is still with us, Chairman, President, CEO, and founder of Tonix Pharmaceuticals. He's on the phone in Massachusetts. So, you know, when you kind of take into account, Dr. Lederman, the reopenings that we're seeing, but we're continuing to be vigilant, wearing masks and so on and so forth, do you feel like things are progressing like they should be and in a safe way?
I'm optimistic but cautious. Most of the United States still has very low levels of infection and exposure. So while some areas like New York City is maybe prepared to reopen, it seems like the rest of the country has to really pay attention to the guidelines of interacting and behaving with appropriate caution.
And so as you look at that, and also you look at everything that's been going on with folks going into public spaces, and you think ahead to kind of the broader sentiment out there of where we are around the virus. We talked about the WHO. We talked about, the reopening element. How does that all factor into what we need to, how we need to be acting sort of in the meantime? And you said earlier in the conversation, that we're not really going to get back to anything resembling normal till there is a vaccine, but we can't live in this sort of binary world anymore. And so I do wonder, when you think about things like, I'm just going to be very parochial here, like sports in the fall, whether it's youth or professional or college, when you think about people going to conferences, all those different things, is that all just delayed until there's a vaccine?
Well, I think that regardless of the scenario, if people are following the guidelines of staying 6 feet apart, wear a mask, washing hands regularly, I think a lot of activities can resume. It's clear that this is a virus and it's transmitted in a certain way by the respiratory route. And if people are very cautious, they can protect themselves and others. So with that in mind, I think a lot of activities can and should reopen. But there's a fear that people will become complacent or get sloppy. And that's something to really guard against.
Yeah, and certainly when you see pictures as things reopen, you do see people getting sloppy. I was reading a story on the Bloomberg about, I think, one of our reporters who took a flight and, there were certainly social distancing and things get in place. But then when there was all of a sudden a flight change, like all of a sudden everybody's crammed next to each other and it's very easy to go back to the ways. I do want to, Dr. Lederman, you guys are working on a vaccine. So tell us where you are, what's the timeline you're working on, and what kind of a vaccine it could ultimately be.
Oh, thank you. Our vaccine is a live replicating vaccine, and that's a particular kind of vaccine that stimulates T-cell immunity. Mm-hmm. Ours is based on the oldest vaccine. It's the same vaccine that eradicated smallpox from the world. And the core that we're working on is about 220 years old. And we're using that as a vector to carry a piece of the COVID-19 pathogen in it. And we are expecting to be in animal studies in the second half of this year. And that will determine how quickly we can get into humans. But we're hoping it can be in 2021.
Well, here's hoping. I mean, we're all looking forward to that in many ways, and as you have very well set out, Dr. Lederman, it is the path back toward something that looks much more normal. Dr. Seth Lederman is the CEO of Tonix Pharmaceuticals, joining us on the phone from Massachusetts. They are, of course, a clinical stage biopharma company, and they're working on a vaccine, and I liked what he was able to explain to us in terms of the types of vaccines that are out there, and there is the most concerted effort I think we've certainly seen in our lifetimes to eradicate anything.
Right.
Carol, it's fair to say.
I hope we stay in touch, because I thought the science of explaining the different, because we know that there's a lot of different vaccines being worked on, and I know they just had signed a deal to support the manufacturing of their vaccine candidate, but I'd love to touch base as this progresses, because certainly I really do feel like we got a lot of the science holes filled in on what we need to know as, individuals who are trying to get back out into our society. All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. Coming up, a really cool story that's in the magazine this week. It's all about Shopify. In the meantime, Jason?
Let's get down to D.C. Nancy Lyons is there with World and National Headlines.
Thanks, Jason. President Trump today is alleging, without substantiation, that an elderly protester who was shoved to the ground and seriously injured by police in Buffalo, New York, was a provocateur who exaggerated his fall. That tweet from the president has prompted a swift rebuke from New York Governor Andrew Cuomo.
How reckless, how irresponsible, how mean, how crude. I mean, if there was ever a reprehensible, dumb comment.
The 75-year-old man in the video has been identified as an activist and a member of the Western New York Peace Center. The government estimates Americans have been defrauded of $48 million and counting in scams related to the coronavirus. Bloomberg's Irv Chapman has more from Washington.
U.S. Attorney Craig Carbonato told the Senate Judiciary Committee about price gouging of such supplies as surgical masks.
A bunch of interlopers in the market came in, obtained mass quantities, raised the prices, and price gouged. These masks went from being 50, 60 cents a piece to selling for $7, $8, as high as $25 in some cases. The Defense Production Act makes it illegal to price gouge, and we've opened up a series of investigations.
Some of the fraud related to sales of phony treatments to prevent or cure COVID-19. In Washington, Irv Chapman, Bloomberg Radio.
Well, the U.S. government is trying to stop a company's planned salvage mission to retrieve the Titanic's wireless telegraph machine. The expedition is planned for August. Federal attorneys are arguing the expedition would break federal law. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Massar, and one of the most read stories in the Bloomberg today comes via Dow Jones. And Carol, it's an interesting one because I do think about
It's heartbreaking.
this coming to bear in big cities. I think it comes to bear when you think about reopening schools, whether they're secondary schools or colleges, that older workers are more at risk. We know that when it comes to COVID-19. And in the workplace, as we think about everybody getting back to work, you're talking about having a vulnerable population very much in the mix.
All right, so we love numbers here at Bloomberg, so listen to this. Around 80% of COVID-19 deaths in the U.S. are people 65 and older.
80%. I mean, that is staggering.
Yeah, that's according to the CDC. Nationwide, that age group represents about 7% of the overall workforce. That's BLS statistics. But we know that that's been steadily growing as we all live longer, which is wonderful, and we often have, our health allows us to do so. But it's also a sign of people have to work longer, right? Because they don't either have pensions or retirement benefits to rely on. I have to say, I read this story, and it profiles a 78-year-old who worked at a beef processing plant in Colorado, and he lost his life to COVID-19, and he was really responsible about getting to work early. And, there's some of it is individuals who just have a responsibility, right? Their work ethic.
Right.
My dad was like that, and I like to think I'm like that. But I mean, we're putting a very vulnerable part of our population and workforce at risk. And I think as a society, I think about generations past, we protected our elderly.
Right.
And I don't know that we're doing that right now.
And it's just a reminder that when you're told to put on a mask or something like that, it's not about you. It's
So
not
true.
about you. It's about protecting other people. And just because you feel invincible or you don't think you're vulnerable, other people are. And you have to think about that as we move forward through this.
I think that was so smart, and you're so right. And I think if, we leave people with anything today, remember that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to trade mixed. They have paired losses as a rally in technology giants offsets concerns over valuations and economic prospects. Apple, for example, rallying by 3%. NASDAQ up 40, a gain of 0.4%. NASDAQ 100 index did trade above 10,000 for the first time ever. S&P down 20, a drop of 0.6%. The Dow now slumping 244 points, a decline there of 0.9%. 10 years up 14.30 seconds, yield 0.82%. Gold up 1%, 17.15 the ounce. West Texas Intermediate crude now up 2% at 39.10 a barrel. American Airlines Group says it will take 141 aircraft from storage to support an increase in July service as travelers return to the skies faster than expected amid the coronavirus pandemic. American Airlines shares, they're down along with the rest of the airline group today. American down by 10.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar, and I am really excited to talk about this next story and with this reporter, in part because, as you know, Carol, love talking to bureau chiefs. Bureau chiefs are the best, just saying.
Doing your chiefing.
Do the chiefing. Natalie Obuko-Pearson is our Vancouver bureau chief for Bloomberg. She joins us on the phone from that gorgeous city, and her story I'm so excited about. Shopify, because, I mean, this is a juggernaut in Canada, and I really want to understand how it's gotten there and what may be next. Natalie, really nice to have you with us. How are you doing?
Thanks for having me.
So tell us about Shopify. Remind us what this is and how it has become so important so fast.
It's this really odd Canadian story, this very big company that a lot of people have never heard of. It's remained mostly invisible to consumers, but it's become the sort of platform of choice for any business that wants to get online quickly and cheaply. And obviously, since the beginning of the year with the pandemic, there's been a lot of businesses that suddenly want to get online very quickly and very cheaply. So essentially what it is, starting with a monthly fee of about $29, you can set up a virtual shop and everything that's needed to run it. So, manage things like payments, inventory levels, shipping. And we've seen, mega brands from like Heinz, the ketchup maker, to Heineken, the beer maker, have built their online presence on Shopify, down to like a small florist in Dublin. And one thing that's key to note about Shopify is it's essentially for those businesses that don't want to be selling on Amazon. So if you want to go online and keep control of your online shop and your e-commerce presence, you're going to go to something like Shopify and set it up on that platform. And so today in the U.S., one of the world's biggest e-commerce markets, if you're buying anything online that's not on Amazon, it's most likely done on a website that's been powered by Shopify.
And they've been powered by the lockdown and the virus, right? As a lot of people quickly pivoted to digital.
That's right. So since the start of the pandemic, I think it was their chief technical officer who was saying something like they were seeing Black Friday levels of traffic every day, all these businesses wanting to suddenly set up an e-commerce shop. And, one example actually was Heinz, this 150-year-old food brand that had resisted selling online for a very long time. But in the UK, as British consumers were suddenly struggling to find pantry staples, they did this about face. It was this very speedy e-commerce pivot. They within a week, they had a virtual shop online selling pasta hoops and tomato soup and so on. And so that has been, replicated in many geographies. And I think, it was, they saw like a 62% surge in store creations over a 6-week period.
I mean, it's unbelievable, too, the juggernaut it's become on the public markets, vying with Royal Bank of Canada as the biggest publicly traded company. I mean, it's bigger than Uber, right? I mean, which I feel is like the thing that's the thing that you just have to say to anybody in 2019 or 2020, and that gets their attention.
it's crazy. And, speaking for Canadians, it's crazy for Canadians.
Right.
This massive juggernaut.
It's an $89 billion market cap company.
Yeah.
That's great. It's a behemoth. I mean, it helped flog $61 billion worth of goods in 2019. Its market value exceeds that of General Electric, and yet so few people outside of Canada have ever even heard of it.
Right.
So, go ahead. Well, I was thinking that, all right, so we look at Amazon. We all know Amazon, right? We use it constantly. Does Amazon have to be worried? I mean, what's the difference, the biggest difference between these two?
Yeah, and that's a great question because I think, a lot of people who are aware of Shopify tend to compare it with Amazon. One key difference is that if you're a merchant and you want to sell your stuff online, Amazon might be an easy choice, but you kind of lose control. Once you put your wares up on Amazon, you're sort of relying on Amazon to get the web traffic to your virtual store, and then Amazon sort of takes over the fulfillment of those orders. And what we actually saw during the pandemic was that as Amazon became overwhelmed, it was prioritizing essential goods. So those merchants who were selling non-essential goods were suddenly finding that they were getting orders, but they couldn't fulfill them. And so that actually helped direct some traffic over to Shopify, where you are in control of your online shop. And the other thing to note is that, Shopify is much more than just selling a few things online. Like, it's evolved. And so essentially now it's sort of a one-stop shop for a business. So during the pandemic, it helped merchants set up curbside pickup. It helped them find ways to set up local delivery. It's also expanding social media. So it set up these partnerships with Facebook and Pinterest because one of the biggest problems for businesses is finding new customers, especially if these people aren't walking by your store every day. How do you find new customers? So then it's trying to expand social media as just another way to do online shopping. And in the past, what we've seen is businesses have to kind of cobble together different applications to manage these different channels. Well, Shopify really simplifies that for you. It's saying, you come to us, we will help you set that all up, and you can see the entirety of your business from this one platform.
And it's still your site, right? Or is it on Shopify?
Shopify is sort of provides the plumbing, but if you are a consumer and you go to that site, you will never see Shopify anywhere unless you go into the code. It looks like, Victoria Beckham's clothing line, or it looks like Heinz online store.
Cool.
So, Natalie, before we let you go, got to ask, obviously all of our behavior has changed on the consumer side, and behavior has clearly changed on the merchant side. How much does Shopify need for some version of this to continue, for this behavior change to continue in order to be as successful as it has been?
Yeah, and that's a great question. I think that's where the skeptics have come in, because when you look at some of these multiples, they're sort of reminiscent of the internet boom at its frothiest period. Its share price has just totally gone stratospheric. And so the one big question is this rush of merchants that came online. Is that necessarily new demand that's going to sustain, or is it businesses that might have eventually come online anyway? So are they has Shopify borrowed from future demand, so to speak? The other big question is how many of the small merchants that have rushed onto Shopify to set up online shops are going to survive? Because we saw after the global financial crisis, thousands of them never recovered, and consumer spending may yet collapse. So, I think one analyst put it, the Shopify gained a lot of market share with the pandemic, but its biggest risk may actually be meeting investors' expectations. Like, it's a huge amount of pressure to have that enormous share price surge.
Yeah, absolutely. Well, it's a great story, a must read. It's on the Bloomberg and on Bloomberg.com today. It'll be in the upcoming edition of Bloomberg Business Week. Natalie Obico-Pearson, Vancouver Bureau Chief for Bloomberg, joining us on the phone from Vancouver. And for those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening to 106.1 in Boston, Bay State Business, that's coming up next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. We've got U.S. equities trading mixed with the Dow, the S&P both lower. NASDAQ higher, climbing to another record. S&P down 15 now, a drop of 0.5%. The Dow is down 207, lower by 0.8%. Technology getting a lift, and NASDAQ surging 55 points, up by 0.6%. Year to date, NASDAQ is up 11.2%. To put that in context, the S&P showing a loss now of 0.4%. NASDAQ 100 index did trade briefly above the 10,000 threshold. Apple climbing on a news report. It is preparing to announce a shift to its own main processors in Mac computers. Apple shares, they're trading higher, up by 3.1%. Well, this is a Fed Tuesday as Federal Reserve policymakers begin their two-day meeting. We'll get the announcement tomorrow. Andrew Sheets is Chief Cross-Asset Strategist at Morgan Stanley.
I think for the moment, the incentives for the Fed and the European Central Bank are to remain very dovish, to err on the side of caution. You don't know if there will be a second or a third wave of the virus. You don't know how long the economic impact will be, so it makes sense to remain extremely accommodative.
Small business optimism rebounded from a 7-year low in May. The data from the National Federation of Independent Business show more firms are anticipating conditions will improve as economic lockdowns are lifted. Sources tell Bloomberg Delta Airlines is in talks to let Brazilian carrier Gol postpone payments on a $300 million loan for which Delta is the guarantor. It's a tough day for a lot of the airline names. Delta, for example, down 8.3%. UAL down 8.8%. American Airlines now lower by 10%. Southwest among the big four dropping by 6.5%. Also trading lower today, Boeing. Sources tell Bloomberg that Boeing didn't sell or deliver any of its marquee 787 Dreamliner jets in May. Again, recapping, equities trading mixed with the S&P down now by 16 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics now. It's a big week, the first day of the Fed meeting. Tomorrow, right around this time, we'll be in the midst of hearing from none other than Fed Chair Jay Powell, the lending and spending tour of 2020. Just get on board, Carol. It's the hottest ticket in town.
Yeah.
To help us understand what we may hear tomorrow and what the underlying economic conditions are is our own Yelena Shalecheva, senior U.S. economist for Bloomberg Economics, joining us on the phone from Long Island. So, Yelena, help us understand sort of the backdrop here, because it feels like every single investor, every analyst we talk to basically goes, well, the Fed did this and the Fed did that. And, you know, the Fed has sort of ridden in to save the day with a little fiscal stimulus to boot from the Congress. But where does the Fed stand right now, especially given the economy that we're seeing?
Yes, hi, Jason. So I think what's interesting, obviously, as the Fed began their two-day meeting today, is where economic data are as opposed to where financial conditions are. So while financial conditions substantially improved, the data between the April and June FOMC meetings continue to show weak economic activity. So one payrolls report is probably not going to change how the Fed is looking at economic conditions. And that is what really goes into their deliberations and how they view the outlook. So this week, this time, we will get a new set of forecasts, economic forecasts for the economy going into the next couple of years. Last time the Fed did it was back in December. They omitted forecasting what is going to happen in March, and now they're reintroducing this forecast. So it will be interesting to see not even like the median forecast, but rather the range of possible outcomes for the economy.
Yeah, we were talking earlier with Gina Martin Adams about the outlook in terms of earnings and estimates and kind of what's out there, trying to get, a good feel of how maybe, much the equity markets have run ahead of themselves. I do wonder when you look at the bond market, what does it tell us? And I feel like it's always a good indicator of what's to come. Do you think the bond market is reading things correctly right now, Yelena?
I don't think the markets in general are reading things correctly at this point, because I think there's a huge gap between how the markets are viewing the outlook and what is really happening in the economy. I think the economy, the fundamentals remain much, much weaker, and I think really the Fed will continue to remain very dovish in their assessment of the medium-term economic outlook.
Yeah.
If you look at personal income and where the wages are relative to, wage income in general, where they were before the crisis, the trend where it was before the crisis and what is happening right now, you will see a huge gap between those two things. So what is really helping economic growth at this point, and maybe that's why we see some nascent signs of the recovery, is policy support. And that needs to continue for the economy to continue to recover.
Well, we know, come on, Yelena, right, Jason, we're going to be covering it right here on Bloomberg Radio. Obviously, the Fed decision and then the press conference and Jay Powell's statement. But I expect he's going to get tons of questions about that jobs report. And I do wonder, too, the balance he has to do, especially when we're now kind of hearing out of policymakers in Congress that maybe there won't be any more relief coming for individuals. And we know it's still a very tricky situation for individuals.
I wonder who will ask this question first, and whether this will be the first or the second question during the press conference. The question about the payrolls report. He will undoubtedly be asked that question, and I think that Chair Powell will take a very cautious tone and will just say that this is just one data point. Obviously, he will acknowledge it's a positive development, but then, I don't think the Fed will jump and just say, okay, this is really, something really positive is happening in the economy. I think, in contrast, they will continue to talk about different downside risks to the economy, such as insufficient support of policy that could lower productivity growth, worker skills atrophy, and things like that. So I think this is really premature for the Fed to declare victory.
All right, Yelena Shalecheva, thank you so much. Always good to catch up with you, and we know you'll be watching all of that closely, as we will tomorrow. Yelena Shalecheva, senior U.S. economist for Bloomberg Economics, joining us on the phone. So, Carol, I did want to point out a story on this topic that
I
I'm
know.
not sure
Brian
that
Chapata's story?
Brian Chapata's column, but also the story by Matt Boesler as well, sort of a companion piece, which essentially says, and I do wonder if Jay Powell's going to get this question, which is, hey, listen, you guys have done a great job propping up the economy. We've seen that in the financial markets, but that jobs data also reminded us of the gross inequities when it comes to white workers and minority workers.
We talked about it with Stephen Skenke yesterday, right? And said that the Fed is constantly watching these kinds of indicators, and they, keep an eye on it. And I do wonder,
but what can they do about it? Like, it's cool that they're keeping an eye on it, but what do they do about it? I think is going to be one of the questions.
They are very much in touch with the entire financial system of the country. So, maybe they've got to be talking to the big banks and the financial community to do more things to maybe help out the disadvantaged, because I think that they get, whether it's predatory lending, whether it's, there's things that happen that I think where certain groups are targeted. I don't mean to just,
I wonder
single
if
out banks.
If they don't push it down to some of the regional Fed presidents. It's a question. I'd love to talk to Steve Matthews about this on our team.
Oh, that's
because,
a good idea.
He covers the Atlanta Fed and a number of the other regional Fed banks. He's done a lot of smart writing about some of the regional economies where this is especially stark. So it's a question for him. Maybe I'll bring him up.
I just think everybody has a role in this.
Yeah,
no doubt about
absolutely.
it. All right, let's get back to World and National News headlines. Back on over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nancy.
Hey, Carol.
Here's where you can find strength in me. Here's
They are remembering George Floyd in Houston, the final memorial service before he's buried next to his mother. Former Vice President Joe Biden spoke to mourners and the Floyd family through a video.
Unlike most, you must grieve in public. And it's a burden. A burden that is now your purpose to change the world for the better. In the name of George Floyd.
Houston officials say a horse-drawn carriage will carry Floyd's casket to Houston Memorial Gardens. One of the 4 Minneapolis police officers involved in George Floyd's death says he did what he could to keep Floyd alive. Earl Gray is the attorney for Thomas Lane.
While Mr. Floyd was moving, Lane asked, should we roll him on his side? And Officer Chauvin said, no, staying put where we got him. Now, we've got a 20-year officer here, and you got a 4-day officer in my client.
Lane has been charged along with 2 other officers with aiding and abetting murder. Officer Chauvin, whose knee was on Floyd's neck, has been charged with second-degree murder without intent, third-degree murder, and second-degree manslaughter. Well, the FCC is proposing a $225 million fine, its largest ever, against 2 health insurance telemarketers for spamming people with 1 billion robocalls using fake phone numbers. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Well, kudos to Suzanne Woolley. She does a lot of really great personal finance stuff for Business Week and for Bloomberg. And kudos to her in part because we were literally talking about this last night at my house, because I had looked at my 401k statement, and it has been just a remarkable portrait, as most people's have, I think, in terms of this rebound. And you can see it when you look at that. And it actually led to a conversation with our 15-year-old where, like, he's like, so what's a 401k? How does this work? And as you can imagine, knowing my family, we're like, all right, have a seat, son. Let's do this. But it's
and when
really
you get a
important.
job, you're going to start one right away.
You're going to start it, and you're going to do it from the beginning. Darn it.
So,
but bad news.
More than 100 million Americans are covered by defined contribution plans, right? So it's some 8.8 trillion in assets, according to Vanguard, and they know a lot about this because they're involved in a lot of it. So what's interesting is because of the shutdown caused by the virus and the economic uncertainty and companies letting go workers and cutting back, this is one of the perks that many companies are considering cutting back on, the 401k match specifically.
Which is a huge deal. I mean, and
It's
that's
huge.
it was interesting. That's what we were sort of breaking down with Henry is, you know, it's pre-tax money for you, and this is something that a lot of companies, including full disclosure, our company is very generous with this, and it makes a huge difference.
And the other thing, Jason, man, I'm just thinking about big picture. There are a lot of companies that no longer are providing their employees with pensions.
Yes.
So the 401k
Very
programs.
few companies are doing that.
Exactly.
I think it's fair to say, right?
Right?
Yeah.
So the 401k becomes your retirement.
Yeah.
And so if this is not, there isn't the company match, it doesn't mean you stop, but it does change the dynamic of it and your ability to really build up funds.
And it's a key benefit.
It's
You know,
a key
it's
benefit,
the sort of
yes.
thing that when you factor in, like, am I going to take a new job or not? It's one of those things that if you're really doing your homework well, it means a lot more money in the long term and in a time when you're really going to need it.
And it's kind of a who's who list of those who have either suspended, reduced, or deferred matches at this point because of the shutdown. All right, you're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Stocks are trading mixed. NASDAQ pushing higher. NASDAQ 100 index briefly back above 10,000. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, working from home, Bill Maloney.
And good afternoon, Charlie. Like you said, U.S. stocks trading mixed today as the FANG stocks do outperform. Dow's currently down 189 points. S&P's dropped 13. NASDAQ is higher by 65. And FANG stocks are up 1.3% as Amazon hit a new record high. The U.S. 10-year yield at 0.83%. WTI crude futures are up 1.9%. Gold trades higher by 15. And transports fall 235 points. Leaders to the upside in the Dow, Apple and Microsoft, while Boeing fell 5% and led to the downside. On the IPO front, Vroom opened up at $40.25. IPO is priced at $22. And in deal news, Cloudera is said to explore a sale. Shares rose as much as 23%. Wrapping things up, online pet retailer Chewy reports after the bell. Live from the First Breaking News desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie, so much. You are listening to Bloomberg Business Week. Well, it's time now to dig into the Small Business Survival Guide. It's an effort that our colleagues at Bloomberg Business Week have been undertaking. It's very useful to understand kind of what small businesses are doing throughout all of this. Leading the charge is Dimitra Kasanides, editor for Bloomberg. She joins us on the phone from New Jersey, along with Aissata Marsh. She is the owner of Studio Phenomenon Hair Salon, on the phone as well. So, Dimitra, remind us what you're trying to do here. And, it's interesting. This obviously started, primarily to look at COVID-19 and the aftermath there. But obviously the world got a lot more complicated and a lot more troubling in the past couple weeks. So I wonder how you guys thought about that pivot.
Sure. Hi, Jason. Yeah, of course, we were looking at small businesses through solely the lens of the virus. But even, the world is much more complicated today. Even if we solely look at the virus sort of kind of next stages, it's complicated because we're all in reopening phase, right? New York City, the big news of the last 2 days has been phase 1 reopening. We'll eventually move on to phase 2 and phase 3. Combined with social unrest, combined with what is happening in the world, how do you keep going? Do you have the money to keep going? Are your customers going to come back? How can you make your customers feel comfortable? So we, Nick Leiber, my colleague, who is a freelance contributor, and I have been talking to business owners, and he has been talking to Aissata Marsh, as we mentioned, about her business in Brooklyn. And it's a lot more complicated than many of us realize when it comes to something like a hair salon.
Well, and let's bring in Aissata Marsh, who joins us on the phone in Long Island. As Jason mentioned, she's owner of Studio Phenomenon Hair Salon. So, Aissata, talk to us about some of the challenges that you're facing. And it's really, twofold minimally, between the virus and then, of course, the civil protests. And, you are a Black business owner. So tell us about some of the challenges that you are seeing firsthand.
Okay, well, I'm located in the heart of Brooklyn. I serve a number of clients per week and have a number of individuals in my business space at any given time. People are scared. Political, social messaging from respective leaders, they're conflicting. We don't know what to do. They need to have some type of economic state ground established, and things are confusing and hard to access. Like for me, I have to restructure my entire space. I have to lessen the people who work for me and actually distant from, they say 6 feet, I say 10 feet. People don't realize when you come inside of a salon or a space, you touch everything from the doorknob to the chair to the bathroom door to, it's very confusing. It's confusing for me as a business owner, confusing as a client, a customer, and my demographics reach from age 17 to 79. So I have to be very wary of my older clientele because I don't want them to get sick because they're right at the war zone of the virus affecting them. So it's very difficult. I'm at wit's end on what exactly is real or not. I myself went and took a COVID-19 test. It came back negative. And some people say it's a negative positive result. To come back negative COVID-19, but then they'll swab their nose and it'll come back positive. So this whole thing is absolutely confusing. I don't know. I mean, each client that comes in, I have to mask up myself. I have to give them a mask. It's just this whole everyday, socialization with people. It's just, it feels like literally I have to retrain myself. It's like learning how to read or do first or second grade math. You have to retrain everything that you thought was normal to make it the norm.
Right. So I started just shifting gears slightly. I mean, so you're in the process of doing all of this, and then, here comes the last 2 weeks, which have totally turned the world upside down. And I wonder how you view that, as a resident, as a business owner, but also as a human being and candidly as a mother.
Right. Well, it's hard. As a business owner, I shut my place down in March because it was so many mixed messages that were going on. I'm a news watcher, CNN, MSNBC. I watch the news just to know current events and things that are happening in the world today. So it went from the higher ups and the president, this virus is nothing, to, it's only 15, to, it's going to be gone on such and such a day. I had to really sit down and realize and tell myself, when they said there was possibility of shutting down a salon, I had to go into thinking mode. As other young business owners do, it's the hustle mode. Because when you're a young entrepreneur, everything is about hustle, hustle, hustle. So I've been in the business for over 20 years. So I had to rethink my situation, where I'm going to go, what I'm going to do, how am I going to service my customers. I went from actually doing hair to making wigs and trying to get my clients to buy the wig pieces just until this entire pandemic is over. So you have to rethink your brain.
Right. Aissata, we unfortunately only have about 40 seconds left, but you do have 2 black sons, and we just want to get your perspective of the protests, and we apologize. We really do only have about 40 seconds here.
Yes. Okay, so as far as the protests going along, I'm a very avid believer with protests, and I stand by them 100%. The only thing that I don't like is dismantle of your own community. You can't come and protest and destroy your community, destroy your stores, destroy the places that you eat, work, and buy your food at. It's affecting the older generation. These people need prescription medications from the local pharmacy. They need to know where they can go buy their groceries in the morning. If you destroy things in your own community, there's nowhere else to go. My 2 black sons, yes, they have protested. One protested in New York, one protested in Miami. It's just a different of demographic.
Well, listen, we're so glad we got time with you, and we do wish you well, and maybe we can check in with you again as things hopefully start to go back to normal. Aissata Marsh, owner of Studio Phenomenon Hair Salon, on the phone in Long Island, along with our own Bloomberg News editor, Dimitra Kesenides. You're listening to Bloomberg Business Week. I'm you're Jason Kelly. I'm Carol Massar. Together, we're Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, Dave Wilson will be along with his chart of the day. Carol?
Yeah. And it has to do with, I looked at it actually. I think it was momentum or something.
That was yesterday.
Oh.
Momo.
Well,
Momo, no.
Momo? Yeah, maybe not. Okay,
Yeah.
something else. All right,
Yeah,
anyway, we're going to
something
get to it in just a moment. And a song coming your way in just a sec as well. Let's get back to your top business stories. Hey, Charlie Pellet, 29 minutes to go. Different tone today, huh?
Very much so. But listen, consider where we have come, perhaps where we're going, giving back a little bit of that today, waiting for that song of the day. Meanwhile, NASDAQ waltzing higher. We've got the Dow, the S&P, they're both lower. NASDAQ Composite Index, it is trading higher, looking at a record there at higher by 66 points right now, up 0.7% at 99.90. In the year-to-date column, up 11.4% for all of 2020. S&P is down 12, a drop there of 0.4%. The Dow lower by 186 points, down 0.7%. NASDAQ 100 index did cross 10,000 for the first time ever. 10-year up 14.30 seconds, yield 0.82%. Gold is up 0.9%, advancing $15 the ounce at 17.14, and West Texas Intermediate crude up 1.5%, 38.76 a barrel. Tough day for a lot of the travel and entertainment names. Among the hotels, Hilton Worldwide Holdings down 3.7%, Marriott International down 4.65%, and among the cruise line stocks, Carnival Corporation down 6.6%, Norwegian Cruise Line Holdings down 9.7%, Royal Caribbean lower now by 6.7%. 3:33 on Wall Street. Time now for the Small Business Report, and now here's John Tucker.
With the Bloomberg Small Business Report, I'm John Tucker. The pandemic-related shutdowns have forced small business owners to rethink how they sell. Some have turned to nationwide shipping. Not unusual, unless your small business is selling food. In Westchester County, New York, Chris Warrington's Walter's Hot Dogs is satisfying transplanted New Yorkers hungry for a taste of home.
Yesterday I was packing one. It said, "Happy anniversary. I know we're not together, but know that I'll always love you."
She uses a platform called Goldbelly. The founder there, Joe Ariel, calls it food e-commerce.
And for many of our shops, they are in fact doing so well that they're sold out for weeks at a time.
Melanie Frost is using the platform and any other service she can think of at her New York City Essa Bagel.
And we just started signing up with all the online delivery services. We just added many more of them.
But a word of caution, those services aren't cheap. They do cut into margins. And that's the Bloomberg Small Business Report.
And we thank you very much, John Tucker. Again, 26 minutes to go. S&P down 15, down 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio. Well, Jimmy on a Tuesday? Jimi Hendrix, Dave Wilson, what's he talking about?
Manic depression.
Yikes.
You could argue that's what the stock market has been through the last few months. You know, this is the manic phase. You go back to February, March, you could argue that was the depressive phase. And I bring that up because, you know, there's this option-based indicator that I spotted on Twitter, courtesy of Dana Lyons of the Lions Share newsletter, that really kind of shows how extreme the move in sentiment about U.S. stocks has been over the course of the past few months. And what it does is track company-specific option contracts traded on Cboe Global Markets. So what we're talking about here is an equity put-call ratio. So in other words, contracts that basically lock in a price you can sell, which is the sort of thing you can do when, you know, you figure stocks are going to fall out of bed, and then the call options that, you know, rise in value as share prices do. So what he does is take a 5-day average of this CBOE equity put-call ratio. And when you run the numbers, you find out that, you know, back in March, when stocks were near their lows, the average was the highest going all the way back to 2002. So, near the end of a bear market in U.S. stocks. So, fast forward to where we were at the end of last week, you had the highest reading since 2010. And in fact, this 5-day average has come down to the point you're now looking at the lowest levels since 2000. So, in the space of less than 3 months, we've gone from extreme fear, as reflected in this indicator, to extreme confidence. I mean, there's the manic depressive element right there. If you want to see it for yourselves, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
That could be the title of your next book, From Extreme Fear to Extreme Confidence.
Okay.
Or it could be even your garage band, Extreme Fear. Extreme confidence doesn't work, but extreme fear is kind of like, hey, let's welcome extreme fear.
Extreme fear.
Totally.
It's like a
These are
metal
the
band.
T-shirts.
Fairly well-known punk band back in the day called Fear. I hesitate to steal their thunder.
Yeah, but Extreme Fear.
Those guys are mean.
That's the band you really want to go see.
Extreme Fear?
Totally.
Extreme Fear with frontman Dave Wilson?
Yeah, totally.
Yeah, totally.
Yeah. I see the T-shirts. I see the mugs. I see it all.
All right, Dave Wilson, we will catch up with you just after the close of trading for your stock of the day. And meanwhile, as Dave was very well outlining, it is such a strange market to look at. Just taking a look at where we are.
It's wait a minute.
It's wait a minute Tuesday. I mean, the Dow is off 0.8%. The S&P off 0.5%. NASDAQ is essentially a flip of that, up about 0.5%. What are we ticking?
Counting down to the Fed decision tomorrow.
Oh, okay.
That's what it's about.
Yeah.
Like, you're just going to wait. You want to see, like, is Yelena right? Like, is Jay Powell going to come out and be like, hey, folks, I know that jobs report came out. It's one report. It's backward looking. We still got a lot of ways to do. And they're not going to rock anything that's going on, right? Because they want a recovery. Yeah. Whatever momentum we've got, they want to make sure it keeps going.
They want to hold on to.
They're going to, absolutely. Absolutely.
I wonder what Jay Powell is going to say, because he's been a little bit more forthright of late. Certainly in that testimony on the Hill, I feel like he was fairly forthright about what he thought the fiscal side should do, meaning the Congress should do in this next step. We know there's some reticence, it feels like, on the part of Republicans in the administration to do anything right away. Maybe wait till after July 4th is what we continue to hear. I also wonder how many questions he's going to get about the broader economy in light of the protests too, and some of the economic evidence that's come out that is really underlying all of this. I wonder if anybody's going to press him on that.
Yeah, exactly. And you do wonder, right? Yeah, I think they will be pressed. How could they not? Right?
I don't know.
Really?
I mean, he should be pressed. I'm not saying he shouldn't. I'm just wondering how much of the oxygen is going to be taken up by that. We'll see.
I know.
You'll hear it live on Bloomberg Radio. That's all I know.
Okay, there we go. There's our promo for tomorrow. All right, let's get back to world and national news headlines. Back on over to Nancy Lyons. Hey, Nancy.
Hey, Carol. Leaders attending today's funeral of George Floyd are recommending major changes in police practices. Houston Mayor Sylvester Turner says his city will lead the way.
In this city, we will ban chokeholds and strangleholds. In this city, we will require de-escalation. In this city, you have to give a warning before you shoot.
Democrats in Congress are proposing a far-reaching overhaul of police procedures and accountability, but passage in the Republican-led Senate is far from certain. Senate Majority Leader Mitch McConnell says he's putting the Republican response in the hands of the only African-American member of the Republican Senate, Tim Scott.
The best way for the Senate Republicans to go forward on this is to listen to one of our own who's had these experiences. He's had them since he's been in the United States Senate. And with his guidance and leadership, we're going to come together with a proposal that we think makes the most sense for the federal government.
McConnell says we're still wrestling with America's original sin. The Palestinians are making a counteroffer to President Trump's Mideast peace plan. They're proposing a demilitarized Palestinian state in the West Bank, Gaza, and East Jerusalem with one-to-one land exchanges with Israel. The 4.5-page plan was submitted in recent days to the quartet of Mideast mediators, the U.S., the UN, the European Union, and Russia. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thanks so much. You are listening to Bloomberg, and I feel like, if nothing else, maybe a lot of the ads that I see during football games and things like that, if there are such things as football games, are going to change because
they will come back, Jason Kelly. Relax. They're going to come back.
It will come back.
It's just a matter of timing.
I know.
What?
But you know what may not come back? All those "Every kiss begins with K" ads, because they're closing a bunch of stores. Jared Jewelers and K Jewelers.
It's catchy, right? It is catchy.
I mean, I just sang
or
it.
Annoying.
Or annoying. Or annoyingly catchy. It can be both. Why do you have to choose?
Exactly.
But yeah, so I didn't know that they were owned by the same owner.
Signet.
Both Jared, he went to Jared. Those I do find those annoying. Those ads. I'm
that's
gonna be honest there.
So they're not gonna reopen
hundreds of stores.
Wow.
Yeah.
It's a lot. They're gonna, let's see.
Also, they own Zales too.
Yeah.
They literally own everything.
Yeah. Well, it's a certain part of the market, right?
Yeah.
And so it makes sense, I guess, that there's, that those two are under the same umbrella. Let's see. So Zales, Signet says it's going to make lockdown-related store closures permanent in more than 150 locations in North America and 80. Company also talking with landlords as it prepares to shut another 150 shops, bringing the total planned closures to at least 380 this year, or 12% of total stores, which is just kind of mind-blowing because there's still a lot out there.
Yeah. So, 2,800 stores in North America temporarily shut down. That's a lot.
I think about our conversation with Kathy Wood, and she and I were emailing a little bit offline, and I really do agree that at this time, it's where companies, we saw it in the financial crisis, like you have to retrench because it's about survival.
Yeah.
And people have got to be taking a deeper look at their business and figuring out, okay, where's the excess and the waste? And we're overstored. We've heard that from Margaret Keane at Synchrony. Yeah. We're overstored, and we've heard it from a lot of people. So I think retail is in for some big changes, Jason. So sorry. You're still going to hear those ads, babe.
Maybe. Maybe less.
Really?
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Technology shares are rallying. NASDAQ higher, trading at a record. NASDAQ 100 index did climb above 10,000. The Dow, the S&P lower, retreating from yesterday's rally. Stocks paring losses as a rally in technology giants offsets concerns over valuation and economic prospects. Here's where we stand. S&P 500 index down 20 now, a drop of 0.7%. The Dow is down 254, down 0.9%. NASDAQ up 43, that is a gain of 0.4%. 10 years up 15.30 seconds, yield 0.82%. Gold up 1%, 17.14 the ounce. And West Texas Intermediate crude up 1.4%, 38.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
And it's time for the Drive to the Close. Joining us once again, David Dietz, President and Chief Investment Strategist at Point View Wealth Management, joining us on the phone from lovely Summit, New Jersey. David, how are you? How are you coping with this market that really can't give us a straight answer, it feels like?
Well, certainly, people are nervous at this point. We've seen a tremendous jump of close to 50% off the apparent bottom March 23rd. But, of course, the headlines are still horrendous. We've just been told by the NBER that we are in a recession that perhaps started in February. The states are starting to open up quite slowly, but hotspots are increasing. Certainly, double-digit percentages of people are out of work, so people are trying to balance this tremendous rebound by the stock market with some of the most horrendous economic headlines we've heard in a generation.
But so what do you choose to focus on, David? Are you really, the equity market tends to look forward, and I do wonder, do you think that's right? And do you think the trade justifies what we might be getting, or is it, too uncertain? We certainly talked to our Bloomberg economics team, and the expectations are not necessarily that high for what we might ultimately get, but there's also a wide gap in terms of, what might happen next.
Yeah, absolutely. So I think the most important thing for people to realize is a medical crisis. And that makes it particularly difficult for economists and portfolio managers to get their arms around, because that's the province of research scientists and so forth. But by all accounts, the silver bullet, which is the vaccine, is getting closer and closer. There's apparently about 100 firms worldwide working on it. It's becoming like the space race. The Chinese
We
talked
talked to one. We actually talked to one earlier today. You're right, and they're we were trying to get to the science behind it, because they're not all the same.
Yeah, so there's national pride, there's big bucks. You've got three initiatives by Merck, Moderna's offering a partnership between AstraZeneca and Oxford University, which just received $1 billion in U.S. funding. So I think that's right around the corner. That's the silver bullet. But, of course, the therapeutic, if we can take death off the table, Gilead's working on a great offering there. And each day we're finding testing is becoming more plentiful, more available, cheaper. So that's one area. The other area is we're seeing just a sea change in consumer attitudes. Initially, of course, people were scared to death, as they should have been, from the COVID risk. They stayed in their home. Now we're seeing just as much focus on people's economic health and their mental health as opposed to the COVID risk, and they want to get out, they want to get back to work, they want to recreate. The states, all 50 of them, are now letting them to do that, and we've seen great metrics suggesting that people are clamoring to Vegas.
Right.
Even air traffic is starting to get better. So those are some fundamentals that are moving in the right direction.
So what are you buying?
So what are we buying? So, I mean, we basically like to if you are very nervous about the outlook, you stick with that stay-at-home and the secular tech growers. But on the other hand, if you're more constructive and see the benefits of historic policymaker stimulus, both from the Federal Reserve and from Congress, then I think you look for some of the blue chip cyclicals. The one we like best, quite frankly, is Boeing. And why? First of all, you've got that valuation advantage. It was over 400. Right now, it's just over 200. So, the question is not whether any airline will make it, is whether people over the next 5 to 10 years will want to take to the skies again. And we think the answer is yes. You basically got a duopoly. You've got Airbus over in Europe. You've got Boeing because of the compliance issues, because of the capital required. And we just saw a crash over in Pakistan, unfortunately, with an Airbus plane. So no one wants to just rely on them. And so we think that Boeing ultimately has the upper hand and will benefit. Now, it's a cyclical business, but they have a backlog of close to 5,000 planes.
David Dietz, one of the things I love about you is you love these down and outs every now and again. And I remember for almost a year or so we were talking Wells Fargo. You were behind them all the way. I do want to talk to you about Coca-Cola. That's one that I grew up with down in Atlanta, and I wonder how you feel about it now.
So, it's the chicken way to play a rebound. Here's why. Because it is a consumer staple, so no matter how bad things get, people will turn to their inexpensive luxury, which is a nice Coke. Unfortunately, they make a little bit more money when you buy it at a bar or a restaurant than when you consume it at home. And that's taken their stock down from 60 into the upper 40s, which, by the way, is only 6 points above where it was 22 years ago.
Wow.
So we think and remember, Coke is 3 times the size of its nearest competitor in terms of non-alcoholic beverages. Most of its business is overseas, so it's got a distribution system, a high-margin one, because it basically they just provide the concentrate and let others do the bottling and getting it to your door business. And so you have a wide moat. You've got a 3.2% dividend. So if things get better, we see it drifting up from that 49 to 60. That's a nice 20% gain plus your dividend. But if things continue to stay tough because of its size, because of that dividend, because of its basically non-cyclicality, we think the downside risk is low. So I think it's a chicken way to take advantage of a general reopening of the economy. And again, 3.2% dividend versus less than 1% of the 10-year Treasury. Yeah. Where are you going to be after a couple years?
Hey, one last name, PNC Financial is another name that you like, and that's got a 3.6% dividend yield. Stock's down about 21% this year. Why PNC specifically? They're based obviously out in Pittsburgh.
Because of the big news. They sold their stake in BlackRock. So 1/3 approximately of their market value is now in cash. That means that dividend at 3.7% is safe. That gives them the option to buy back stock. It's now about 125. It was 160 at the start of the year, so this could be an opportune time to do that. Or they're in the catbird seat to make an acquisition. As we all know, the financial stocks are under pressure, so they could go to the Sun Belt, they could continue in the Midwest, or they could get some sort of a fintech play. They've got a lot of options. You don't have to worry about financial stress with PNC because of that successful and timely sale of BlackRock.
Well, the company's CEO was making some remarks at a Morgan Stanley conference actually today and said they're going to be patient to deploy capital from that sale of BlackRock. And they said they'd consider stock buybacks, quote, at the margins, and that will ideally expand geography, focus on C&I and real estate. So you're right. Yeah. They've got some breathing room. They've got a lot of breathing room.
And
right
expand
now.
Geography sounds a lot like they're going to buy another bank. To me, I mean, that's what I would say. It's like, well, maybe if we want to be in the South, it's like we're not going to open a bunch of PNC branches, and there are some banks for sale.
Yeah, exactly.
Down there. Good stuff. David Dietz, thank you so much. Always good to catch up with you from Summit. President, Chief Investment Strategist for Point View Wealth Management. The close is just ahead. We're going to take a look at some of the movers and shakers, catch up with Dave Wilson. Later on, we're going to talk about a cool new book. Lots of fun stuff ahead. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Mixed Tuesday, folks from Valero ringing the closing bell as we wrap up trading. And we're brought to you by Witham, a forward-thinking advisory and accounting firm helping clients, quote, be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting Witham.com. Again, mixed finish to the day. Stocks paired losses as a rally in technology giants offset concern over valuations and economic prospects. Treasuries climb. We had the S&P 500 index falling 25 points, down 0.8%. The Dow dropped 300 points, down 1.1%. NASDAQ higher by 29 points, up 0.3%. In the year-to-date column on the Bloomberg, NASDAQ now up by 10.9%. That is a record for the NASDAQ Composite Index. 10-year up 15.30 seconds with a yield of 0.82%. Gold up 0.9%, 17.14 the ounce. West Texas Intermediate crude up 1.5%, 38.77 a barrel. NASDAQ 100 index ending the day at 99.67. Did trade briefly above 10,000, first time ever. David Dietz is Chief Investment Strategist at Point View Wealth Management. Moments ago, right here on Bloomberg Business Week, he told us there has been a definite shift in sentiment.
We're seeing just a sea change in consumer attitudes. Initially, of course, people were scared to death, as they should have been, from the COVID risk. They stayed in their home. Now we're seeing just as much focus on people's economic health and their mental health as opposed to the COVID risk, and they want to get out, they want to get back to work, they want to recreate.
Tough day for a couple of well-known retailers. Signet Jewelers, which owns the Zales chain, along with Kay, will be making lockdown-related store closures permanent at more than 150 locations in North America, as well as 80 in the United Kingdom. Its shares today plunging by 16%. Also, even though it's opening more stores, Macy's down 7.1%. Recapping, S&P down 0.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Poi come on, shake him, not stir.
Just move on up toward your destination.
I can make things move without touching them.
Shaking all over.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's take a little bit of a deeper dive into the trade today. Of course, Charlie breaking down those major equity averages. Just keep in mind, 24 hours from now, we will be done through that Fed meeting, and I am very curious, Jason, to see what Jay Powell and his team have to say about that jobs report last Friday and just kind of about the economic outlook. In the meantime, kind of tick-tock a little bit. A little bit lower on the Dow and the S&P, a little bit higher on the NASDAQ today. If I look at the S&P 500, though, overwhelmingly a bearish tone, kind of taking a pause here. 442 names in the index losing some ground today, 62 higher and 1 unchanged.
Yeah, it's interesting, and trying to get a sense on the S&P at least of what was moving around and why.
Yeah.
Tech certainly did a little bit. AMD was actually your number one gainer. There wasn't anything super clear. There's some speculation about some new products, but that is a name that we've talked about quite a bit. We've talked about their CEO. I believe she was on the Bloomberg 50 last year. It's a stock that's up about 23% for the year, and that is notable in a year where the S&P is essentially flat. At this point, setting aside the fact that it's remarkable that the S&P is flat, to see a stock gain 23% is notable.
Yeah, and I'm looking here for Netflix because it's
I was looking at that too.
Right, one of your biggest gainers here. Is it number 2 or number 3 here in the S&P 500? And I don't necessarily see anything here as a catalyst.
One of the things that I wonder about with Netflix is if, as the dust settles, and this is a question for like a Felix Gillette or somebody like that, as the dust settles, are people with all the new streaming things coming out with Disney Plus? And I have to say, we were just actually messaging about the small subset of movies that my 2-year-old will actually watch, and they're all Disney plus Little Sesame Street.
Yeah.
But I have to say, Disney Plus, there's not a ton on there. I mean, HBO Max, there's a ton. and HBO Max is not done very well. Netflix has a lot of resilience here. I mean, Netflix has a very good installed base. Their algorithms are really good. I feel like they're going to get toward the end of this year, and I'm saying this more as a consumer as anything, that they're going to get to the end of this year and be like, all right, well, everybody's out now. You can compare and contrast, and Netflix still looks pretty good as a product.
It's up 34% this year. Yeah, I just think when we sit down and it's just amazing how many times we sit down and we're like, there's nothing to watch. And how many streaming services are coming in. But, what are our go-to services in terms of where we look at things? And Netflix is always there, right? Like you're always checking it out to see what's there. But I do think, as more original content comes, like, did you watch Defending Jacob on, I don't know if you've got Apple.
No, we don't have Apple.
Like, that was really well done content. Yeah, but I mean, I think it will ultimately come down to, do you have a hook to get people in, that there's kind of a must-see programming. But
I'm going to subscribe to Apple when the Shrink Next Door comes out.
I know. Is that where they're doing it? Is it Apple?
Yeah.
And
Will Ferrell, Paul Rudd.
That's going to be brilliant. I got to tell you. That's going to be, like, incredible.
I can't wait.
For so many different reasons.
But for those who don't know what we're talking about, that's Joe Nocera's hit podcast. It was the #1 podcast in 2019, and it is now going to be a movie starring Will Ferrell.
Don't you think about your world? Like, it's funny. I put out the headline of New Jersey governor basically saying New Jersey's open. Yeah. Like, how much are we going to just be like, I just want to get out? Yeah. I will say in this area, we're still going to be very cautious. I at least that's how I feel until I have a sense of comfort that as I go out in the world that we're going to be okay.
Well, it's interesting. Here in the burbs, it's phase 2, which is notable, which means in our little town, outdoor dining as of today.
Wow.
We're going to outdoor dine today.
Are you?
I'll have a report tomorrow.
Oh, I want to know.
Going to go over to JP Doyle's, our favorite little pub. They've got a little outdoor garden. I'm going to take the boys. So it's going to be great. It's going to be great. First time someone will have served me food since February. Isn't that crazy?
That's really kind of funny.
And I don't have to clean up.
Oh, my God. Well, I want to know how it goes.
More to the point, I don't have to rewash the dishes after the boys do them.
Yeah, I know. I was instructing my daughter how to clean a frying pan and, like, make sure she gets the grease. And she just, like, looked at me. She's like, why don't you just do it?
Yeah, exactly.
That went over well.
It's a good trick. All right, let's take a look at volatility. The VIX up a touch, about 5.6%, closing at 27.26. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson back with us with your stock. What you got?
HD Supply Holdings, Jason. It's an industrial distributor that serves about 500,000 customers in the U.S. and Canada. The HP comes from former owner Home Depot, which sold the business in 2007 to Bain Capital, Carlyle Group, and Clayton DeBillier and Rice. HD Supply went public in 2013. The ticker is HDS. The company shares more than doubled from their initial price through last May when they set a record. This year, the shares peaked in February and fell as much as 50% in the next 6 weeks. While HD Supply has rebounded since then, the recovery faced a hurdle in today's release of fiscal first quarter results. The company's shares had fallen for 7 straight quarters in the wake of quarterly reports. Today, though, was another story. HD Supply's earnings and sales held up better than analysts surveyed by Bloomberg were expecting. The results beat the average estimates by the most in any quarter since the company went public. And in response, HD Supply climbed to a 3-month high. The shares closed with a gain of 6.7%.
Yeah, I remember it was a massive private equity deal.
Was it?
Today. Yeah, at the height. One of the last, they called them club deals.
Yeah.
Where you had a bunch of private equity firms coming together.
Hence
Dave
the club.
Them. Thus the club. Yeah, Carlyle and CD&R. It was a pretty successful deal, all told. So it's been an interesting one to watch coming out of the Home
and
Depot.
Bucking the trend today in what was really an overall down market. Dave, do you do dishes?
I put them in the dishwasher, and occasionally I run it.
Okay.
That's good.
Okay. Just
Checks
checking.
out. All right. Dave Wilson, thank you so much. We'll be back with you tomorrow for your market insights, your chart, and your stock. You're listening to Bloomberg Business Week. Let's head out to San Francisco. Ed Baxter is there. He's got world and national headlines. Hello, Ed.
Hi, Jason, and hi, Carol. Well, as you guys said, New Jersey is opening more doors.
Today, the stay-at-home order, which has been in place since March 21st,
is being lifted.
Yeah, Governor Phil Murphy also raising the limit of indoor gatherings to 25% of capacity or 50 people, whichever is lower. New York, good day on measuring cases.
Only 1% of those tested positive for COVID-19. That is an amazing statement.
Meanwhile, Mayor Bill de Blasio says the city council is working on a four-prong approach to help safe policing. And on reopenings, New York's Westchester and Rockland counties enter the second phase of reopening today. And on the day that George Floyd is laid to rest in Houston, the president has alleged without substantiation that the 75-year-old Buffalo man shoved by police was a provocateur who exaggerated his fall. This is not sitting well with Governor Andrew Cuomo.
You saw his head hit the pavement. You see blood on the pavement. Maybe he fell harder than he was pushed. How reckless, how irresponsible, how mean, how crude.
Cuomo says that in a time of pain, the president is throwing gasoline on those flames. Voting today, Georgia hitting some potholes, long lines, broken voting machines. The mayor of Atlanta urging voters to hang in there in those long lines. This as Mr. Trump fights mail-in balloting. And Hong Kong's chief executive is strengthening ties with Beijing, even as provocateurs took to the streets on the one-year anniversary of the beginnings of the extradition protests. Global News 24 hours a day in San Francisco. I'm Ed Baxter, and this is Bloomberg Radio.
Ed, thank you so much. You are listening to Bloomberg Business Week, and despite not being able to have big events, I have to hand it to the Economic Club of New York. I'm a member, so shout out to them. We have a lot of members here at Bloomberg, and they put on a great event today. They've been putting on some great events throughout. Paul Tudor Jones, PTJ, as he is known, legendary hedge fund manager, also pretty amazing philanthropist, started Robinhood. I just want to read this quote. It's great. And we should remind people before we read this quote, he does hail from Virginia, so that explains some of this. He's a big supporter of UVA. If there was a franchise for humble pie, oh my Lord, they'd be a mile long to own that, because we all had huge gulps of it, me included. He's talking about the run-up in stocks since the low, and basically he joining others, including Stan Druckenmiller, who basically was like, yeah, I missed it.
There's some really big Wall Street heavyweights who were out, back in March. A lot of doubts about the financial markets. They continued, that over the last few months here. In fact, Jones told clients in early May he was a fan of gold and put a small percentage of his firm's assets in Bitcoin as he looked for havens. But as we know, Fed to the rescue, and also the relief programs, and that has put in a ton of support into the financial markets. And so it's really fascinating. These guys who have seen a lot of market cycles were really kind of turning their back on plain vanilla, U.S. stocks in the equity market, and to see kind of how it played out.
Yeah.
I just feel like you don't bet against the Fed. There's the other T-shirt.
Exactly, and
Another
I think
one.
and I think that that's something we're going to be reminded of again tomorrow when we see Jay Powell and we see the market react. So we'll be breaking that down live here. We will bring you the decision at the top of the show. Then we'll bring you the press conference live, Jay Powell in his own words. But yeah, the other thing I will say, I do like it when these money managers come out and say, "Yeah, missed it."
Yeah.
Like that makes
everybody
me feel
makes
a little bit better.
mistakes,
Yeah,
right? Sorry,
exactly.
we made a mistake.
Right.
Yeah.
So
own up.
Don't make it again. Like, make me some money. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. A 300-point drop today for the Dow Jones Industrial Average, down 1.1%. S&P retreating from yesterday's advance, down 25 points, down 0.8%. But NASDAQ climbing to a record, up 29 points higher today by just about 0.3%. Stocks declined on concern the blistering rally in risk assets has overshot economic prospects. The 10-year yield, 0.82%. Gold up 1%, surging $17 the ounce to $17.15. Crude oil, West Texas Intermediate, up 1.5%, $38.75 a barrel. Brent, $40.98 up today by 0.4%. Recapping, S&P lower, down 25, a drop of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Let's talk a little Bloomberg Green. It's a big day for Bloomberg Green, and this segment is brought to you by PGIM. Outlast today's uncertainty with the long-term perspective of PGIM, the investment management business of Prudential. Find out more at pgim.com.
It is. It's the first quarterly issue of our climate magazine. It's called Bloomberg Green. It's published. It's all part of a news vertical here at Bloomberg under the same name. And it's really fascinating. And in this first issue of the magazine, Jason, there's a story that is among our most read on the Bloomberg terminal today. It's about the Walt Disney Company and the millions of dollars it has plowed into the jungle highlands of northern Peru. Pulitzer Prize winning reporter and who wrote this fascinating and revealing story, Zach Miter, Projects and Investigations reporter here at Bloomberg News. He joins us on the phone from New Jersey. This is quite a story. Zach, tell us a little bit about what Disney is up to.
Sure. So Disney is, like a lot of big companies, trying to show that they're doing something about climate change. And what Disney has done in particular is they've basically claimed that they've been very successful in reducing their emissions over the last more than a decade. And the key to that is essentially not actually reducing actual emissions; those are still going up, but by essentially sending money into this jungle in Peru that allows them to claim that they're preventing deforestation that offsets the pollution that they're emitting into the air.
How'd you find out about that? I mean, this is a really revealing story in many ways. And I wonder, was this one of these things that was sort of hiding in plain sight, or how did this come to your attention, Zach?
Oh, yeah, there's no secret about it. One thing that's interesting about this is one of the projects, this Disney project in Peru, is one that has been kind of pointed to over the years as one of the big successes of forest conservation to offset emissions, and it was made more interesting once I got into it by realizing that for Disney this was like a really kind of straightforward trade, because they were building all these new cruise ships. The cruise ship business is very successful. They're building 3 more now, but when they were building their 3rd and 4th ship, they realized that their emissions were going to be skyrocketing. And they had just set all these goals to try to have emissions go down. There's not really much you can do to clean up a cruise ship. You can't get a solar-powered cruise ship or a wind-powered cruise ship, and so there's no real other options. And so that's what led them to the jungles of Peru.
I got to say, I toured one of those ships. I mean, they're incredible. But, I guess what's interesting about this story, Zach, is so they haven't done anything as a company to reduce their impact necessarily. Certainly these new cruise ships, right? The impact that they're having on the environment.
Well,
yet they are offsetting it. Or go ahead, yeah.
Right. Well, they're doing what they can. I mean, a lot of their power and their theme parks is now coming from renewable sources. The problem is the cruise ship business is a great business. They didn't want to. They wanted to continue to build more and more ships. And with ships, there's not much you can do to clean them up. I mean, it's basically a fossil fuel business. There's no alternative at the moment. And so they had all the latest energy efficient engines and lights and stuff, but it's still, it takes a lot of fossil fuel to get from Florida to the Bahamas and back.
Well, and the whole business of offsets, I feel like, has become an industry in and of itself, Zach. Help us understand essentially the controversy around this, because what you guys, really do so well in this story is you really help us understand kind of the human cost of this, right?
Yeah. So the idea behind the offset is it's a great idea, which is basically there's companies and people that want to reduce their emissions, but want to still continue to be able to fly and go on cruises and things like that. And then at the same time, there are forests around the world that need protection. They're being chopped down. And if you could somehow find a way to just kind of transfer the value from the people who want to pay to reduce emissions to the place where the forests are being cut down, you could sort of have a deal where everybody wins. That's the theory behind it.
Right.
Part of what this story was about is how, in practice there's complications. You're not just kind of, the promotional videos are all about, everyone's happy and holding hands and there's this beautiful pristine jungle, but actually this jungle, like thousands of people already live there illegally. And there was kind of this long-standing conflict between the government and the people who live there. And Disney and its conservation partner kind of just walked into the middle of this situation and, ended up having a huge effect on the outcome in ways that, really were not, it was not something that was part of the original goal, right? Basically, the government agency that is the steward of this land had like no money, and all of a sudden, because of Disney, they have all this money, so they can start patrolling and policing this jungle.
I feel like, man, there's just so many different ways you can go. Bottom line, it doesn't prevent polluters from, continuing to burn more fossil fuel, which is, I feel like, what folks are, that's the goal. There's so much in this story, and I know we just scratched the surface, but it is an incredible read, and we suggest that everybody check it out. You can read more stories on climate, news, science, and the environment at Bloomberg.com/green, or look for Bloomberg Green on newsstands today. The amazing Zach Miter, projects and investigations reporter at Bloomberg News, on the phone from New Jersey.
Yeah, and also just read, go and search everything Zach Miter does. Seriously. I mean, he's one of the best reporters. The Pulitzer Committee noted that a few years ago, and he's continued to do great work. I think about some of the predatory lending stuff he's covered as well. So check that out. Our thanks, as always, to Zach Miter. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, this is one of my favorite stories, I have to say, just that we followed for years and years and years, that of American Dream.
Right, you can have a teenager in this time, right?
Yeah, in the time it takes to birth a mall in New Jersey. Yeah, for reals. It used to be called Xanadu. Now it's American Dream.
And now it's just like, oh my God, trying to figure out what life is like post-COVID-19.
And now it's kind of a nightmare. In any case, we're going to catch up with John Gittleson in just a second. Looking forward to that. But first, Charlie Pelt's got an update on all those headlines. Hey, Charlie.
Well, hello there, Jason Kelly. Happy Tuesday. Stocks move lower today on concern the blistering rally in risk assets overshot economic prospects. The S&P 500 index in a mixed session halted a surge that drove the gauge higher for 2020, led by energy and industrial companies. Small cap shares underperformed. Here's where we ended today's session. S&P 500 index fell 25 points, down 0.8%. Once again, negative on the year, down 0.7%. Nasdaq, though, up another 29 points, up 0.3%, bringing its year-to-date gain to 10.9%. The Dow fell 300 points, down 1.1% for the year, down now by 4.4%. 10-year up 16.30 seconds, 10-year yield 0.82%, gold up 1%, 17.15 the ounce, and West Texas Intermediate crude rallied 1.1%, 38.62 a barrel on WTI, up today by 43 cents a barrel. Federal Reserve has begun its two-day meeting. We'll be getting the announcement tomorrow, 2 o'clock Wall Street time. Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
You know, they are focused on the fiscal side of the equation. So for the most part, I think that, broadly speaking, the Fed is going to be, supportive and keep yields somewhat anchored under these circumstances.
Iraq is asking some Asian refiners to consider foregoing prompt shipments of its Basra crude, a potential signal the country is trying to meet the output cut pledges it made to OPEC at the weekend. Among some of the energy names today, we saw shares of ExxonMobil declining by 2.2%. BP lower by 3.7%, EOG Resources down 4.3%, and shares of Pioneer Natural Resources lower today by 7.1%. Big move today for the enterprise software firm Cloudera, which counts activist investor Carl Icahn as its largest shareholder. Sources say it's exploring a potential sale after receiving takeover interest. Shares of Cloudera surging today on a down day for the S&P. Cloudera among the tech names advancing by 18.6%. Recapping, S&P down 25, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's talk a little bit about American Dream, the family behind it. We're talking about the Mega Mall over in New Jersey. It's been quite a saga, and helping us understand where we are and who's behind it and who is affected by it, none other than John Gittleson, investing reporter for Bloomberg, joining us on the phone from Cali. How are you, John?
I'm all right. It's sunny in L.A.
Go figure. Well, it's nice to hear your voice. So sunny here as well on the East Coast, and even sun at least literally shining on American Dream, I think, over there in New Jersey. But it has been a bit of a rough go. Tell us about your story, because it's revealing.
Yeah, well, the family behind the American Dream, they were like pioneers in the Mega Mall. The largest mall in the world was their first big project, the West Edmonton Mall in Canada. Mm-hmm. Then it was followed up 10 years later in the early 90s by the Mall of America in Minneapolis. And they struggled to get big projects off the ground, but they really put their focus on the American Dream about 4 or 5 years ago, after that project had been stalled through bankruptcy, through the financial crisis, the Lehman bankruptcy. Everything went wrong. That place was totally snake bit, and Chris Christie called it the ugliest building in New Jersey, which not a lot of competition even outside of New Jersey for that moniker.
Just watch it, buddy. You're talking
I was
born and bred
wondering
in New
how that was
Jersey.
going to play out. Wow.
You're lucky you're thousands of miles away from me, Gittleson. I'm just saying, but I know where you live, so just watch it.
We got plenty of ugly buildings out here too.
That's true. Yeah, but I mean, to your point about sort of snake pit, I mean, there's a name familiar to our audience and certainly to you, John, because I know you and I both covered him, and Carol has over the years too. I mean, Tom Barrack, had his pause on this at some point. It was called Xanadu, and he notably, in the story I wrote almost 12 years ago, called it Xanadon't. I mean, it was just a disaster in many ways, and it's turned out to be similar for this family. I mean, in part because of the pandemic, right?
Well, exactly. I mean, they were just ready to roll in March, and this place has like indoor ski slope. It has water park, has theme parks. I mean, the idea is that a shopping mall wasn't just a place to buy a bunch of stuff. It was a place to have experiences, and people would come, as they have to their other big projects, not only to, shop, but to have a day at the theme park or whatever. And unfortunately, in our new era of social distancing, I don't think people are going to want to hang out in the water park. They're not going to, eat at the food court. They're not going to enjoy all of the things that were supposed to be special attractions to a giant mega mall like this and distinguish it from buying online or going to some factory outlet or some other, place where you could get in, get out, and just buy your stuff and leave.
So you do wonder, John, are they going to have to change their model dramatically? Are they just going to have to be patient until there's a vaccine, which we know is not quite around the corner? And at the same time, how much time do they have? I mean, what do they got? Something like, is it $5 billion in debt? Is that with all their properties, or is that just American Dream?
They've got $5 billion on the West Edmonton Mall, the Mall of America, and the American Dream combined.
Yeah.
And so I don't know exactly how long they've got. Part of the deal is it's like that old J. Paul Getty expression, if you owe the bank $100, it's a problem for you. If you owe the bank $100 million, it's a problem for the bank. Yeah. And these guys owe so much money. They're also such big scale operators that it would be hard to find somebody to replace them. I mean, these things are like operating a Universal Studios park or Disney park or something like that. In fact, the one in the American Dream is the DreamWorks Park, another movie studio.
Yeah.
So, how do you get somebody who has all the operational skills that these guys do, all the connections with retailers, and, sort of the track record? And that's part of their issue. It's a very interesting family saga, too. I mean, the grandfather of the guy who's in charge of the American Dream brought his family over from Iran. They were like rug merchants, moved to Canada, went from rugs to retail to, real estate.
Yeah, no, it's an amazing tale. So you'll have to, unfortunately, we're out of time, but do check it out on the Bloomberg terminal and on Bloomberg.com. John Gittleson, love catching up with you. One of our best reporters, especially on sort of the retail investment world, real estate investment world, I should say. Great to catch up with him.
Coming up, we're going to talk about the IPL market, so we have a good guest to do that in just a moment. Let's get back to all the national news headlines. Back on over to Ed Baxter. Hey, Ed.
Hey, Carol. On the day that George Floyd is laid to rest, President Donald Trump has suggested the 75-year-old Buffalo man pushed to the ground by police was a provocateur, exaggerating his fall. Angry response from New York Governor Andrew Cuomo.
I mean, if there was ever a reprehensible, dumb comment, and from the President of the United States, at this moment of anguish and anger, what does he do? Pours gasoline on the fire.
This as presidential contender Joe Biden spoke directly to the family of George Floyd.
Jill and I know the deep hole in your hearts when you bury a piece of your soul deep in this earth. As I've said to you privately, we know you will never feel the same again.
And police departments like New York try to come to some form of reform.
A chokehold ban for the NYPD, a bill that will affirm every individual's right to record their interactions with police officers.
And Mayor Bill de Blasio says visible shield numbers ensure early intervention on officers. Meanwhile, New York, a remarkable reporting data as only 1% of those tested for coronavirus tested positive, and New Jersey announcing a lifting of the stay-at-home order and urged caution on reopening. And some Harry Potter Twitter stuff. Daniel Radcliffe has responded to a tweet from J.K. Rowling. He says transgender women are women. Her tweet was that women were people who menstruate. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
I make a point to stay away from Harry Potter Twitter. I'm just going to say. I'm not going to go down that rabbit hole. Meanwhile, in Europe, Amsterdam.
More to come.
I know you were planning a big trip there, to do all the Amsterdam stuff that you do. No, you weren't. I know. But, I mean, it's interesting. They're going through a bit of a reboot. This is one of the most read stories on the Bloomberg today, especially from our colleagues in Europe. And interesting that they're taking a lot of steps to essentially kind of pare back and if not do away with some of the things that have made Amsterdam so famous over the past few years.
Well, so what's interesting, right? And we talk about this. The virus lockdown, right, has made you look at your neighborhoods. And first of all, by shutting down what has been the red light district, basically, in Amsterdam, people look at that neighborhood and are like, wait a minute, maybe we can do something different with it. Maybe we can take it back. And so it looks like there is a bit of a fight on to reclaim it. We know it's been a place where, I guess, tourists go and there's, lots of stuff going on. That's a little vague, huh?
Yeah, the things you're
stuff.
alluding to are
stuff.
Are sex workers and brothels and the red light district.
Buy cannabis,
cannabis, the famous coffee shops, and all of those things. I mean, it's interesting. I mean, it does sort of raise this question of, what does gentrification look like?
Yeah.
And, do you do away with some of the parts of the city that draw people in? And do you want to turn those areas into...
It's a city center, though. Like, would you like it to be a different type of city center?
Yeah.
Like, think about what happened at Times Square. I remember one of my first jobs working at New York One in 42nd
I did not know where that was going. Okay. All right.
Good. Really, Jason? Wow.
I did know where that was going. Yeah.
I think I'm done for today. No, but anyway.
No, you're not.
But think how Times Square has really changed into kind of this family destination. So maybe there's hope for Amsterdam.
Amsterdam. All right. You're listening to Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. After the bell, AMC Entertainment Holdings, which is the largest American movie theater chain, reported a first quarter loss of $2.18 billion after the coronavirus forced the company to close cinemas and threatened its ability to stay solvent. With the pandemic beginning to ebb, the exhibitor has started to reopen in Europe and is planning to restart here in the United States. It was a mixed day for U.S. stocks. The S&P fell on concern the blistering rally in risk assets overshot economic prospects. Treasuries climbed. NASDAQ up again today, climbing to a record. We begin there. NASDAQ up 29 points, up 0.3%. The NASDAQ 100 index did cross the 10,000 threshold for the first time. S&P fell 25, down 0.8%. The Dow dropped 300 points, down 1.1%. 10-year yield 0.82%. Gold up 1%, 17.15 the ounce. And West Texas Intermediate crude up 0.5%. 38.37 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Jason, one of the things
Carol.
Hi, Jason
Kelly.
Nice to
There.
see you.
Yeah, nice to see you.
It was nice to see today. We had another IPO today. Vroom.
It's all happening.
Yeah, online seller of used vehicles. That stock in its debut up almost 118% here on its first day of trading as a publicly held company.
Do you have to have in your name to go public these days?
Apparently. Casey the Bankers, we really like what you're doing. Just think Facebook would have been Faceboom.
Yeah, Foom.
Or Zoom.
Yeah.
All right, Mark Lehman is being very patient. He's president of JMP Securities. He works with institutional investors and high net worth individuals. Joining us on the phone from San Francisco. Mark, it is good to have you here with us, but it is kind of funny. It does feel like every IPO this year has to have in it. But it does feel like the IPO market has loosened up.
Well, it has. And, I said to some of the investors I talked to, we've gone from gloom and doom to vroom and zoom.
Hey, there you
well
go.
done.
And thank you very much. I'll be playing here all week. But truth be told, I mean, it's a metaphor for the whole market. And we have, and they play into I hate this term, but the new economy, right? Vroom, it makes it so you can sell your car, and I've done it. At home on your phone, touchless, and they'll give you a great price.
Did you sell a car? Did you actually sell a car with it?
I did. I 3 years ago, I was one of their first guinea pigs, if you will. And I will tell you, 3 years ago, it was a good experience. And 3 years later, from anecdotal evidence from friends, it's even better. The pricing's better. Experience. It's just a tremendous. And let's be clear: buying a car, whether new or used, or selling a car, whether new or used, is one of the most unpleasant experiences for most people, and they ameliorate that process. And it's a great company. Now, it's early. They have a lot to do, but they have a great CEO who was at Booking.com and a great management team. They have an investor base that is, I think, second to none. And the street's giving them a lot of credit for, I think, the road ahead of them, no pun intended. And I think they're going to do very, very well.
Well, the stock certainly did do really well on its first day, more than double its IPO price.
And you guys, Mark, were, I believe, involved in ZoomInfo. We had the CEO on our air right after that public offering. Tell us about the process, because when we were speaking to him, he was talking about obviously was a very different world than he expected to be living in and shopping a company, and that's your job, is to help him do that. I do wonder, even just briefly, aside from the market atmospherics, the actual logistics of talking to investors and selling through a company must be a little trickier right now.
Well, it is. And JMP, my company, has been fortunate to be on both of the IPOs of those two companies in the last 2 weeks. And you're right. This was a roadshow in the old days being 6 months ago. You'd be on airplanes and you'd be hitting 7 cities in 8 or 9 days, and you'd be zooming across the world and sitting down with 6 or 7 investors, institutional investors in each of those cities. You fast forward to today, that process has been truncated because you're able to do many more meetings, right? You're able to do hour meetings every hour.
Yeah.
And just to give you an example, Vroom moved up their IPO pricing 3 or 4 days because of the ability to have many more meetings, obviously all online, And getting back to another Zoom, the Zoom that we all use now every day, that was the first virtual IPO I'd ever seen. And they did it well before COVID for obvious reasons to promote their brand. And it turns out that was a harbinger of things to come. And so if you would have told investors 6 months ago they would not be able to meet with the management team and proverbially look them in the eye and shake their hand, you'd say, that's a great idea, but we're going to pass. And now, obviously, that's not true. So it's the way it's going to be. I think it's going to be the way it's going to be for some time now, because there are going to be parts of the economy and certainly certain cities where you're just not going to be able to do that. And frankly, there's some investors who do not want to sit across from managements right now for other reasons, health reasons, and they still feel comfortable putting tens, if not hundreds of millions of dollars to work for companies. And that is an amazing confluence of events post this COVID world.
Yeah, it's so dramatic. We had Kathy Wood on of ARK Investments, and that's her whole investment thesis. It's really thoughtful, but it's all about innovation, disruption. And, she says at times like this of stress, you really see new ways of doing things come out of it. What do you think sticks with us, Mark, longer term?
I think a couple things. One is I think the ability to work remotely especially for people who have worked together for some time now, is going to happen. I think people are going to have a harder time if you're a brand new employee getting that culture and getting that teamwork. But I think parts of this are here to stay. The other thing is, and we didn't even get to this, but we will hopefully at some point, is that healthcare innovation, I think, is and the rapidness of the innovation, I think, are going to be hallmarks of what COVID has brought to light, which is that innovation on the healthcare side is real, it's faster, it's better, and that will be, I think, a theme for the next decade. I've been calling it the Moore's Law of this generation.
Yeah.
Moore's Law for the last 30 years has been double your computing speed at half the price in perpetuity. I think you're going to have double the speed, and obviously I'm not talking logarithmic, but you're getting speed of innovation in healthcare that we couldn't have even dreamed at 10 or 15 or 20 years ago, and I think that's going to be a theme that will play out for investors for a very long time.
And as that plays out for investors, what does that mean ultimately for your business? Does that mean you invest more heavily in banking those types of companies? Like, what are the decisions you make based on positing that?
It means we're allocating more resources to life sciences. It also means that emerging growth companies, because it doesn't take, clinical trials are very, very lengthy and have a lot of logistics and dollars that are necessary to get these done. But the kind of companies that can innovate very rapidly, very early on in their life cycle is going to accelerate. Now, I'll give you one example. Alzheimer's has been a horrible, insidious infliction that has faced many, many of us for a very long time, and has not been a great investing horizon for the last 20, 30 years. We've had many, many failures, very, very